run. One with your love, not behind the scenes, on the streets. The shadows broken, swept away, swept away, swept away. Run with your life, not behind the scenes, on the streets. The shadows broken. Downstairs, the animals are dancing. Trust your body and your head.
Hello, everybody. Just wanted to come in here really quick, let everybody know we're going to be starting here in 47 minutes with Matt Maley, Chief Market Strategist for Miller Tabak. He's been doing this for 40 years. Right now, we're just waiting for him to get off the live member session. He's going to get off at 5 p.m. So at 5, once he gets out of there, he's going to come here. We're going to talk about stocks, trade ideas, education, the Fed, the meeting, all this stuff. We're going to break it down for you as traders. You know, we got your back here. That's why we go hard here. So just stick around with us here. We're going to put some tunes in the meantime. We're just waiting here like everyone else. And we're going to get started at 5 p.m. Eastern. Just mark it on your calendar, guys. We'll see you here in a little bit. Yo, what's up, everybody? How we doing? How's everybody there doing in the YouTube chat and the Zoom chat? Hello, welcome to the session here. My name is Rodrigo. I think, if this is your first time here, I really think you should pay attention to the session we're about to have. It's going to be with Matt Maley. He's a chief market strategist. He's been in Wall Street for about 50 years. I'm not 50, 40 years. My God, he's been doing this for 40 years in Wall Street. He was a trader at Solomon Brothers, which was one of the biggest most important trading desks in all of Wall Street for 70s, 80s, like decades, right? Until it got bought out, I think. And then he was head of trading at Merrill Lynch, where he managed Fidelity and BlackRock, two of the biggest funds in the world. All right, the biggest. So, and he's been a chief market strategist at Miller Tabak for about 14 years or so going. And look, I'll tell you, I've been here. I'm a trader myself. I've been trading Matt stuff for about a year, and this guy's like, he doesn't miss. He's good with this stuff. A lot of you guys already know this. I don't have to tell you that. But anyways, welcome everybody. That's what we're going to be talking here about today. Trade ideas, education. Matt's on his way. I'm waiting for him here. But we're going to be talking about all that stuff. What's up, Mashir? Good to see you here, my friend. All right, let's see what we got cooking here on YouTube side. Let's go. So in about 1 minute, a couple of minutes here, Matt's going to be here, but I just wanted to show you the chat room there and go over a couple things before we do get this whole thing started. Just need a second here. All right, guys. So basically, a couple shout outs here though. Some of you guys that have been here for quite some time that I do know some familiar faces. We got David Goncalves. What's going on? Gomar, Ethan, Carlos Cato. What's up, man? Haven't seen you in a while, man. Good to see you here back in the game. All right. P Kanoe, Jimmy D. What's up? True Live WG. What's up, man? So couple shout out there to you guys. We're going to be talking about Matt Maley's trading strategy today. We're going to be talking about sectors, earnings, options education, setups. We're going to talk about crypto. And at the end, make sure that you leave your stocks until the end. We're going to review stocks from the tickers from you guys at the end. So without further ado, I think I have the man himself here. Let's go ahead and bring on Mr. Matt Maley. Let's go.
How's it? Hey, Rodrigo, how's it going? Good to see you as always.
Man, I'm getting tired of saying this, but thanks for the trade today, man. It's been pretty good in the chat room, man. I'm gonna be honest. Quick trade, that's it. Get back to work. I love it, man. How's everything going there in the chat room with the folks?
That seems to be going well. We're doing some real nice trades, and a nice one today. Well, another couple of nice ones today, depending on when you got in and out. Will be very interesting to see what happens tomorrow when we get the what happens with NVDA. NVIDIA is trading lower this morning, I'm sorry, trading lower this evening after reporting their earnings. Although the stock was down about 9% after they reported, then it's traded back. It's down 5 or 6%. We'll see what happens. Like I think their conference calls at 5:30. I'm not exactly sure, we'll see how the stock trades in. But it's going to have a big impact as we go into the weekend. And I've been saying last couple of days that these next several days trading, in other words, a couple of days ago, I was saying the next few days are going to be vitally important. Tomorrow's going to be another one of those days to see how we react to those NVIDIA, which is a big semiconductor chip company, and to see how the market goes, because the market's in tough shape. It's volatile. Obviously, everybody knows that. It's going to continue to be volatile, and which is great for us because that's where we can make money. We can make it in both directions, which is very nice.
Yes, no, I mean, it's definitely a total game changer because some people don't know that you can make money on both ways and trade it. And the way that you do it, I mean, it's really, I do, and the timing, right? Really the timing there, Matt. But and I still have those NVIDIA puts. I reopened them yesterday, but yeah, we'll see how things go, right? It's very exciting time, right? I mean, we're witnessing like history, right, Matt? Just with everything that's going on.
Well, that's the thing, is that one of the things that people don't understand about what happened 20 years ago, and it is very similar to what's happening now. And I don't think it'll be as bad, but in other words, what I'm talking about is the dot-com bubble. And I'm not saying that we're going to go down 80% in the Nasdaq, because the bubble didn't get anywhere near as big, but it's still going to last more than just the last 4 or 5 months that we've gone through. It's going to last a year or more, probably 2. And the market's going to have to move lower over time, but it's going to see big pops along the way. And the reason why I say let's say, why in the world do you think it's so similar? And the reason for that is that people don't really understand what happened at the end of the 1990s. People think, well, we got all this euphoria. Everybody saw this, the new economy, and all these internet companies were coming on, and so therefore the world was changing, and so the markets, these tech stocks just flew to the moon. Well, yes, but they also got a huge help from the global central banks, just like we did in the last few years. What happened back then was Y2K. And for those who don't know, Y2K is when your computers, especially back then, it read your computer, 1997, I was what it said, 1990, 91, 92, but it didn't say, it just gave the double numbers. It was 87, 88, 9. And then suddenly people realized that when all these computers were programmed back in the 1970s, they didn't think about, oh, geez, when we get to 00, the computer's going to think it's 1900, not 2000. Therefore, all those people, all their money in their brokerage accounts and their bank accounts, in any account, whether it be a business, wherever, was going to show that they didn't have anything, because none of them were around in 1900, right? So what they had to do, luckily they realized this well in advance, and they started spending literally billions of dollars. The global economy did this, and the global central banks flooded the system with liquidity to make sure they had the money to fix this situation, number one. And number two, to keep the markets steady so people wouldn't panic and pull their money out of the bank. It's like, oh my God, my bank account might turn to zero on the day after December 31st, 1999. I got to pull my money out of the bank and put it in the mattress. That's what they were worried about. So they flooded the system. And there was and they kept that liquidity spigot open for another month. And there was no coincidence that, sure enough, in early February 1999, the market topped out, and we know what happened after that. Same things happened the last few years, where the Fed poured all that money into the system to save us from a very legitimate crisis, just like the last one with the pandemic. And now that they're pulling the pedal off the metal, we're seeing that same kind of unwinding of leverage and bringing the froth back down and the markets back down to reality, to what they're really, to the underlying fundamentals. So this kind of trading is going to go on for a while, and it's not just the next few weeks, and not just the next few months. I think for at least the next year or two.
Okay, all right. So all right. Let's just get into this, right? So here's what's going to happen, guys. Matt's going to show us, everyone here, we're going to talk about what's happening right after we're done with this, but we're going to show you first how to make money from what's happening, how to profit from all this stuff that's happening out there. And we're going to talk about it, and Matt's going to break it down. And trust me, you're going to leave this meeting a smarter person. Trust me on that. But we're going to show you how to make money out of it. We're not here just to talk about news. We're here to show you how to make money out of it, right? So let's get into it, Matt. I'm excited. I'm pumped, man. Let's go.
All right, great. We'll go right to it here. We're just going to show you some of these stocks, some of these trades we've made. They've been in stocks and in ETFs in the last couple of days. I'm sorry, well, the last couple of days, the last couple of weeks, and the last couple of months. The point is, we've been able to do this very successfully on a consistent basis. We don't pretend and make that every trade's a winner. Anybody who tells you that is lying through their teeth, okay? We have some losing trades, but the key is you keep the losing trades to a minimum, you keep them small, and keep the number to a minimum, and then keep the losses to a minimum. You get out of the trades when they're not working. And then you really pile into the ones that are starting to work, and there's nothing wrong with adding. Too many people think they make one bet and that's it. No, this thing's working. Let's add to it right now, because these momentum moves get going in a big way. Let's make sure we take care of them, take advantage of them the whole way. Don't just get them for a small. Sorry here, I just want to get these things up. Make sure I have the right one. Bang, bang, bang. Okay, here it is. No wonder. Okay, there we go. Okay, good. We're going to do the first one we did today. Okay, and let me blow it up so we can see it better. Now, again, when we go into the chat room here, and we come in and whenever I put on a trade, I'll give you the full trade. It's not like, hey, the market looks really good here. Why don't you buy some option ETFs? Or, hey, the tech group looks really good. Why don't you buy the XLK? Or why don't you buy Apple computer calls? Or why don't you buy Microsoft calls? Or, geez, the market looks like it's going to roll over. Why don't you sell some NVIDIA? I'm sorry, buy some NVIDIA puts, something like that. No, we come in with exact trades. If I do a trade, you know about it. I don't do trades. I don't just show some of my trades. I show all of my trades. And they're not all just in stocks or ETFs. They're in indexed, I'm sorry, they're in leveraged ETFs sometimes. They're in the commodity markets. They're in the currency markets. They're in the fixed income markets. I mean, and well again, we'll go over some of these things. And even in the foreign exchanges where we had the foreign markets, I should say, not foreign exchange, but we did one in China, which was a huge home run. But this is what we did just today, okay? We came in the TQQQ. Now, last night, we bought some SQQQ calls, which I don't have the chart on that. But Rodrigo, how much you make? But I can't remember how much you made there. But this morning on those options.
Today I made.
Oh, we lost you there, Rodrigo.
Oh yeah, sorry. Yeah. I made $4,000 today in the morning. I can show you guys my account again. Like I've literally been making insane trades these past 2 weeks with Matt. So
okay, yeah, which is great. I obviously right. So here we had this thing on the TQQQ. Now this is what this is the leveraged ETF on the QQQ. In other words, 3 times the QQQ, which is the NASDAQ. If people don't know, the NASDAQ 100, which is, it's the top 100 stocks on the NASDAQ, highly concentrated in the big cap tech names. And I just really thought the market was getting shaken out. I noticed that the last couple of days was this will be the 4th day in a row. The market saw a low in the morning, then rallied at some point, sold back off, and then rallied to the end of the day. And so we came in here right just after 1 o'clock, before 1:30, I think it was 1:08 or something like that. And we bought and again, specific trades. And we don't just go in on the trade and say, we go into the chat room or the site, the chat room, and I give the specific trade. But I also have another page where I also post a trade. So because you're scrolling down here, there's a zillion different posts in there. I mean, how are you going to find which trades I'm doing? There's a separate page for that, so you can look. And there'll only be it's mostly just trades in there. There'll be a couple other. It's filed under Matt's important comments, and I'll make some important comments that I see what's going on in the marketplace. That aren't trades, but for the most part, it's trades. So I came in right here and I said, we're going to buy the TQQQ, May 27th, expire on Friday, $30 call option. So we have the asset, the expiration date, the strike price, and whether it's a call option or a put option, okay? And so I put it right there. We bought it right here about 10 minutes after. And then at the end, now I've been holding on to these, and we'll see what happens tomorrow. But you see what happened here? Some people came in and said, I'm taking my profits right here, not at the exact top, but right before the top, made over 100% on their return. So that was today. Yesterday, let's see here. Okay, we made it in both directions, okay? Earlier this week, I was just say earlier this week. We came in and really felt that the market was in trouble. This was actually last week, right? Last week. We came, at the end of last week, I'm sorry. We came in, saw the market was looking very dicey. We bought the SQQQ. Now, what the SQQQ is, that's the inverse ETF, the inverse 3 times leverage ETF. We bought the May 27 calls on that one. See the exact one, the $62 calls. We bought them right on the close, right before the close on last Thursday. And we sold them midday on Friday for a 98, basically we doubled our money, 98%. Okay.
Yeah, and I got the ones that were a little bit shorter. I made about 180%. So
Right.
I ended up racking in like 18, 19 like racks on that one trade. So yeah, I mean,
exactly. This is now a couple of people, including Rodrigo, bought the May 20 calls. So they were only literally just had 1 day to go for expiration. And so he made even a bigger percent. This was the more conservative play, and it's still double our money. Okay. But okay, the very next day, the very next day we came in and the market, so we made that money, we made the profit at noontime. But at the end of the day, when the market was really selling off, I saw a few things and used my experience in the marketplace to believe that the stock market would rally strongly at the end of the day. Again, I did a little bit more conservative. I went out till Monday. This was the QQQ. So I didn't do the leveraged ETF. I just did the regular QQQ. And the reason why I did that is that they expire, the index options expire 3 times a week, Monday, Wednesday, Friday. The leveraged ETFs for those big indexes are just weekly options. Okay, they're only on Friday. So I wanted to go a little bit shorter time frame, and we made literally almost 200%, 175%. We bought them after 2:30, sold them just before the close, and made, again, this was just last week. And there were people who bought them. They bought them at 2 o'clock for the May 20th calls, ones that expired that day. One guy on the desk, I'm saying in the site, David, made 1,000% on his money. Okay, so
Was that David?
I'm sorry.
Was that David that did like
That
10x?
was David, exactly.
Yeah, he 10x his account. Wow.
Right, 10 times. I say 10. What did I say? Yeah, 1,000%, 10 times, 10 times. So okay. So now I just want to go back here. So that was last week. Then we came into this week, and today was okay. So I already told you about those. Today, boom, boom. Okay, now you don't have to go back very far. We go back the week before. Okay, towards the end of the week, again, I thought the market was getting ridiculously oversold. I'm sorry. So what do I have here? I'm sorry. I just want to make sure I got the right ones here. Good. Okay, here we go. Yes. Okay, so this is 2 weeks ago. So we had a nice trade today. We did another trade earlier in the week. We had a nice trade last week that I just showed you. Now we're going back 2 weeks ago, and the market was getting ridiculously oversold. Whoops. Hold on one second. Okay. The market was getting ahead of itself, okay, earlier in the week, okay? I thought the market was really getting ahead of itself, so we went out and we bought. Let's see if I get this out of the way. I don't know if you can see it, okay? But there we go. Let me move this here. There we go. Down here. Okay, we came in and we bought again, this is going to SQQ. We went to this, I bought the calls. This is an inverse ETF, so it was a negative bet. I knew the market was going down. We bought them in mid-afternoon. By the next morning, shortly, about a half hour after, not even right after the opening, we had sold them for more than double our money, up 116%. Okay, so that was on the 11th and the 12th. We bought them on the 11th, sold them on the 12th. That's a Wednesday, that's a Thursday. Friday the 13th was Friday.
Yeah, just for everybody to know, like Matt is posting exact entries, exact exits, and he's talking with the chat members too. Like this is... Yeah, it's all day. It's Monday to Friday, like 9 to 5, right? So it's all day.
Exactly. So you can see we took this profit on the 12th in the morning, but we weren't done that day. The market got sold off even more. And at the end of the day, I said, okay, we're going to flip it. We're going to go from being bearish to bullish. And we're going to buy the TQQ. Remember the last one was the SQQ, okay? Now we're buying the TQQ because that's the bullish ETF. The May 13th, $29 calls. We bought them at 3 o'clock, and the next day we sold them mid-morning for a 600% gain, 600% in just several hours, okay? At the same time, or shortly after I bought these at 3 o'clock, shortly thereafter I came in and said, Apple Computer is incredibly oversold. It's an oversold so I went through the reasoning too. I wasn't just like, you got to buy these Apple calls. I said, hey, listen, the stock's oversold. The reason it's oversold, it's down 10% in 2 days. No negative news. This is Apple Computer. Apple Computer doesn't go down 10% unless there's a reason, okay? There's got to be some sort of news out there, or the market's crashing or something, right? It went down 10%. And the reason why is because people used that as a source of cash when their cryptocurrencies were crashing. Remember back then, that was when the Terra stablecoin crashed. It lost its peg, 1 for 1 for the dollar, right? And the entire cryptocurrency market just fell out of bed. The problem is it's a very thin market. The people couldn't raise the money they needed to meet their margin calls. So they went and they sold what they could sell, stock like Apple, which is a very big, high cap, very liquid name. They knew they could raise their money and they sold the crap out of it. Well, that was on earlier in the week. Well, on Thursday, late in the day on Thursday, I realized, hey, the cryptocurrencies had stopped going down. So this forced selling of Apple Computer is going to stop. And we're going to buy the stock. It's going to jump back the next day. So sure enough, I didn't get the exact bottom, but we got it shortly thereafter, sold them the next morning again around 11 o'clock for a 400% gain. So it's not just, we don't just deal with these index ETFs. We look at, we also look at individual stock options. But again, this is something that we go, you can go back. I went back obviously several weeks.
Yeah.
You can go back several months.
And you haven't even we haven't even touched about so guys, for y'all to know, Matt has, and before he had the record, but he still has the record now. He beat it. So now for the biggest gain trade alert that we've ever gotten before, I think it was the first one was Viacom, and then the other one was FXI, which like some people they were calling me, blowing me up on my email, like, man, I just made so much money on mass about this FXI trade. I'm like, what's going on there? Like everybody in the chat was going crazy. Book 700%. Thank you, Matt. All these messages. I'm like, what happened here? Like,
Well,
that's crazy.
this one was, and we got several $1,000% gains too, which was really worked out. But the FXI, again, we used, I just used a combination. You cannot use, the most important thing you'll learn on here is that you cannot depend on fundamental analysis only when if you are an active trader. That's how people lose money. Oh my gosh, this is really good. The stock should go up. And I'm like, well, okay. And here's, but sometimes stocks get it way ahead, even no matter how good a company they are. There's a difference between a stock and a company. Okay. If a real good company and is usually the stock is usually good, but sometimes it gets so far ahead, the stock is so far ahead of the company's fundamentals, even though the company is still a really good company, the stock has to come down and come down hard. But the same thing happens in the other direction. Things get sold off so much, people just throw out, just say, get me out. They panic, they get out of a market when it's completely oversold and quite cheap, and they overdo it to the downside. And that's what we did in the FXI. Okay, the FXI is the China large cap ETF, Chinese stocks large cap ETF. I've been bearish fundamentally on this for a long time. I'm still bearish on them. But when we came in here in March, this thing had become ridiculously oversold. And we look on a technical basis, it was nothing but lower highs and lower lows all the way through. But this became an extreme one. And we look at this RSI, Relative Strength Index. Its RSI became the most oversold it had ever reached, ever. Okay. And not that the FXI has been around for 100 years, but it has been around for about 20. It's the most oversold ever, okay? And so I looked at the Bollinger Bands charts. It was the most oversold ever. And then what happened here is it really made this thing from being bad lower lows and lower highs to a really bad move was when the U.S. government started threatening, or the SEC started threatening that they were going to delist a bunch of these names, delist them in the U.S. So I knew that this was incredibly oversold. Again, RSI is Relative Strength Index. When it gets down to 30, it gets down to this green line. That means green, go ahead and buy. When it gets up to the red line up at 70, that means sell, stop. That's why it's a red line, stop. It's getting overbought, do not buy it anymore on a purely technical basis. This thing, it becomes so, look at how it got oversold here and it rallied nicely. Got oversold here, it rallied nicely. Got oversold here, it rallied nicely. This was ridiculously oversold. And I said, okay, we got to back up the truck and buy this thing. Not only, so I knew that from technical analysis, even though it went against all the fundamental analysis out there, and even my longer term fundamental outlook. But I also knew from experience that the Chinese government, when things get really crazy, comes in and supports their market. They literally come in and buy the market. And so I knew that was going to happen. So we went in, we bought we bought the calls, and look what happened. The next day, the market rallied 27%. Or actually, it was about 27%, 28% 2 days later. But either way, can you imagine if the Dow Jones Industrial Average rallied 27% in a day? I mean, that would be historic. And this is what we saw. And sure enough, we had gone out. We bought the FXI March 18th, $30 calls. We bought them late in the day on the 15th. When the market opened, I did not say sell them. They were up 1,000%. I said, no, we're not going to sell those yet, because even though a lot of stocks that see ridiculously high gap openings, I usually just say, okay, take our profits and get out. But I knew that China was going to continue to support the market. So I said, we're not going to sell at the opening. We waited till about 11 o'clock and 10:30, I guess. It was up almost 3,000%. I said, okay, we're going to sell half. You just got to use risk. You got to use risk management. But I said, definitely don't sell all of it, because this thing could really go a lot higher. And sure enough, it did. By the end of the day, it was up almost 8,000%. I said, sell the other half. Now that's when I got out. So we made some really nice money there. Other people held on to the next day and made, one person, like I said, made over 14,000%. But again, these are the types of things. It's a consistent, we don't do it every day. We don't get these kind of huge moves every day. But we did get last week. It was not a trade I was involved in. It was a trade that a couple of people in the chat site, I'm sorry, in the chat room were involved in, and it had to do with Target puts. And they made 2,000% when Target got absolutely hit. They were smart. They asked me what I thought about it. And I said, I think that's a great idea, but I'm going to hold off for now. I wish I had joined them because they
Not
made
that it
2,000%.
matters, but Tiffany made between 4 and 6,000% on those
Right.
Target puts, and also on Ross, seem like
Raw
something like that.
scores, right? So
Yeah,
again, we put money on the and VIX, and believe me, we're not. I mean, you make it 80% in one day. That is a nice trade. Okay, this was actually over time, but we've been making these trades, and I'm not going to bore you, but I just kill you with the too many examples because we got a million of them here. But oh, by the way, this was the Viacom trade that we were talking about, the old record. When again, I used technical analysis. This was the meme stop craze. This is a year ago, so I don't want to. This wasn't a recent one. This is about a year ago, and Viacom became ridiculously overbought on its weekly chart, most overbought ever. Let's buy the stock. Let's buy the puts. Stock crashed 60% the next day, and we made 5,000% on our calls. And some people said they even made as much as 10,000%. So, but we're also looking for a lot of doubles and singles, doubles, and triples. We're looking for the ones where, and I use that in a baseball term, obviously, where you're making 25% here, or 75% there, or 125% there, or 40%, et cetera. And then we get these kickers that really, bring home the bacon, and make it again. We make those bigger bets when we're really sure about them, and then needless to say, when you lose 20 or 25%, or as I've had some really small trades, I've lost 100% because they were so small I didn't really care. But that doesn't matter when you're making many hundreds of percent in some of these bigger trades, and the portfolio was up significantly this year.
I want to give a shout out to Tracy for joining the Stock Picks Inner Circle chat room. Let's go, Tracy. Matt, and here's the thing, man. Like, and there's a lot of education too, because like you're not only are you making money out of the volatility, but you're also explaining it as it happens, right? And look, you turn the news on today, and they're just gonna say, bottom, bottom, bottom all day, right? But like,
Right.
It's really hard to get some raw, good information as a trader, and I think it's great that you actually do that, right? That you actually help these traders with the education of what's really happening. It's not what they're saying out there, but like what's really happening behind the scenes, right?
Right. I mean, it's again, I was a trader. I did 25 years at Solomon Brothers and Merrill Lynch on their trading desk, their institutional trading desk, where I covered the biggest trading desks on Wall Street. The biggest hedge funds, the biggest mutual funds, insurance companies, banks, et cetera, you name it. I mean, whether it be Fidelity or BlackRock, or the biggest hedge fund in the world, et cetera. So you really understand about what's really going on for active trading, because that long-term theoretical stuff, so many strategists are just theoretical guys. I mean, they're talking about what should happen. I'm talking about what is going to happen right now. And again, as a strategist, I look at it long-term, intermediate term, but also I have 25 years of trading. I look at it on a short-term basis as well. And, we all, so often you see on TV, they try to explain everything with a fundamental reason. And sometimes I'm like, has nothing to do with it. A certain stock was so ridiculously oversold, didn't matter what the news was going to be about. It was like, oh, it's a sell the rumor, buy the news reaction. I was like, well, yeah, but really all it was is the stock got ridiculously oversold. There was no fundamental reason behind it. It was just got so oversold, there was nobody left to sell it. That's what you have to understand. When too many people get on one side of the boat, whether it be oversold on a technical basis, overshorted on a positioning basis, sentiment is really negative on the stock or a group or an overall market. There's nobody left to sell. The same thing on the buy side. It gets too bullish. I don't care how good the news is. We just saw it. Apple Computer last year saw 3 different declines of anywhere from 14 to 20%. Maybe it was 26%. Even though the stock market went straight up last year, and Apple was one of the best stocks in the market. Stocks get too far ahead of themselves sometimes, and they have to come down. And nothing to do with their long-term fundamentals. And that's why. I said earlier this year in Tesla. It was late last year, and I kept talking about the stock was at $1,200. I'm saying this stock was ridiculously overbought. The market, the Fed is telling us they're going to change their strategy, their policy. this stock's heading below 1,000. And there were people who thought I was absolutely out of my mind. Well, it dropped below 700, not dropped below 1,000, it dropped below 700. Again, doesn't mean, and it's, how could you go against Elon Musk? I'm not going against Elon Musk. I'm not going against the Tesla car. I'm going against the stock, which is, and I was like, how could you say it was impossible when the stock has dropped anywhere from 25 to 60% dozens of times in the last decade? How could you think that can't happen again? I mean, I might have been wrong, but to say there's no way it could happen made absolutely no sense. The best companies in the world, Amazon has changed the world over the last 25 years, and it's seen dozens of declines. And when their earnings, you know what their earnings did? You know what their revenues did? From 1999 to 2002, they actually bottomed before the rest of the market. I mean, their earnings went through the roof. Their revenues went through the roof. Their stock went down 90%, okay? And they sure as hell didn't go out of business, and they made people very, very rich over the years, and the stock's been going sideways lately, but that's a whole different thing. But the point is, you have to understand, if you're only looking at the fundamentals, you're gonna get burned. And that's what I really try. And here's one of the fundamental things that we're talking about. Look at the S&P, everybody's saying, oh, the market's getting cheap. I'm like, what freaking planet are you on? 17 times earnings. That's where it's trading right now. This actually is from a couple of days ago, but it's still basically right in that thing. 17 times forward earnings, okay? In 2016, do you even remember the decline in 2016? That wasn't like a major bear market. It was the correction of about 18%. We dropped down to 15 times earnings. 2018, the last time the Fed tightened, got down to 14. Now, this was obviously a dramatic situation with the pandemic, 14 times earnings. But just to get down to 15 times earnings, the stock market has a lot further to fall. And it's not going to do it in a straight line, just like it didn't here and just like it didn't do here. But we're going to take advantage of it because we have the tools to do it.
Yeah, and I don't think we've really talked much about it, but like you do, you have this Tuesday session. I mean, and now it's going for like hours, I heard, but like you touch a lot on education there, that sort of stuff, right?
Yeah, we really would like to spend a lot of a lot of time on this. That's another thing too. We're not spending any money. You spend, when the people get in the chat room, they join. That's your cost. Okay. And next year, it's not going to be 20% higher. It's going to be the same thing next year. If we raise the cost for newcomers 6 months from now, you'll still pay what you paid this year. And the other thing is that I don't make any money. Nobody here, Benzinga, nobody makes any money if you're trading a lot. I'm not, churning your account. If you do a lot of trades, your broker, whoever your trading platform you use, I guess they'll make more money, but we won't. So I don't get anything out of this. I don't, unless I'm doing a good job to help you make money. And the whole idea is for you quickly to cover the cost of joining this thing and then make many times above that. That's the whole idea here. But anyway, what we do on Tuesdays, and we did it this past Tuesday where I talked a lot about a couple of different things in history, why I thought it was important. Talking about the 1987 crash and what really happened then. I was there. I was in my 5th year. I'm ending my 5th year in the business. And I would say I was a veteran, but I wasn't a rookie. I understood what was going on. I saw what really happened. And so we talked a lot about that. We talked about what portfolio insurance was and why that is important. And again, one of the things that I think a lot of people give me credit for is I take, first of all, I take some complicated issues and make it easy to understand, number one. Number two, I make other issues that really aren't all that complicated, but a lot of people on Wall Street like to make them sound complicated because it makes them seem smart or whatever, smarter than they are. And I just try to, make it explain it in a way that can make sense to anybody. A lot of this stuff is a lot less complicated than people think. But we do a Zoom video, just like this one we're doing right now. And we go for a half an hour. I think Friday it went, this past Tuesday we went, I think about 50 minutes. And then we'll talk about we'll do some educational stuff. We'll talk about some historical things. Sometimes we talk about, the importance of, why certain, the technical analysis, why it's important and why it works. And it's very helpful. It's not a be all and end all, but every single great hedge fund manager of the last 50 years, it uses technical analysis religiously. Every single one of them. Anyone who says they don't, well, no, they all do. They all admit it. It's the guys who are the long only guys who claim that they don't look at it, but most of them, the smart ones, at least pay attention to it because it does. First of all, it is based on fundamentals. It's not just It's not just a bunch of lines drawn on a chart. And it also lets you know where are the buyers coming in. The buyers are consistently coming in at this certain level, and then finally it breaks that level. That means the buyers are done. And the same thing on the sell side. Sellers come in consistently at a certain level, and it breaks above that level. The sellers are done. This thing's going a lot higher. So those are the types of things. And you know, and I've said this on, I haven't said this in recent webinars, but I've said it in the past. I mean, a good way to think about technical analysis is that we're constantly hearing that the stock market is 6 months ahead of the economy. And that's true. And it's forward looking. So are individual stocks, so are groups. So when a stock really gets going in one direction, it's like somebody, was that just magic? I mean, why does that happen? Well, it's not just magic. It's something, there's a reason for it. And you think about it, if you have a company that has been having a tough time for several years, and then suddenly things turn around and the stock starts trading up,
Yeah.
how do people know that? The people, what happens is you get the hedge funds and the mutual funds who have an army of analysts. They see it in advance. They see that this company that's closed their factories and laid off people are now suddenly reopening those factories and adding people. The earnings aren't going to show up for 9 to 12 months. And the institutional investor who's got an army of analysts, they're not going to wait for the earnings to get better. They know they're going to get better. They buy it now. And we as individuals get to see that in the technical analysis and see it 6 months. That's why these stocks move up and down 6 months ahead, not just because it's some just by chance. And it really works out well to help us out.
Yeah, and I'm getting a lot of questions and emails from you guys here in the chat. We have about like 400 or 500 people overall watching this right now. So these are questions from you guys. I'm just going to take a minute here or two, Matt, just to go over them really quick. Then we'll get back.
Yes.
So, all right, let me just pull this stuff here, these questions. All right, so are the sessions on Tuesday recorded? Yes, all Inner Circle members have access to those sessions on Tuesdays, and you can get the recording as well. Does everybody that joined get a free laptop? Yes. If you see a laptop on the checkout, that means we still have. Is this for new traders or just for advanced traders? It's for both, really. We every person can if you're buying a stock and you're selling a stock, it's the same concept. We're buying a put or we're buying a call, right? And then you just sell it when you get rid of it. So same concept. We're not doing anything complex. This is like for new people that are new in options that want to trade the volatility, right? All you have to do is mirror Matt's trades and he'll post entries and exits. So good question there. What's the schedule? Schedule is Monday to Friday, 9 to 5. Matt will be there at some, maybe a little bit earlier if you got CPI prints or something like that. So good question. Is there a money back guarantee? Yes, we do have a 7-day money back guarantee. So that whatever reason, just let us know. You get all your money back. Price at renewal is the same as right now. And yes, Matt does cover the education. Now I got a question here in the chat, Matt. What's the WJ? So this chat room hasn't been open for a year. We started it, I believe it was in like September of last year or August of last year, somewhere around there.
It was like, I would say about August, but the one thing I said, and when I mentioned the Viacom trade that we did that worked out really well, that pick was not in the chat room. It was before the chat room started, but we did make it in the tier 3.
In the newsletters,
right? It was a pick that I made in the tier 3 call that I do. So it wasn't officially part of it, but it was a documented call where I said buy here and sell there.
Yes. So separate from the chat room, Matt has some other stuff here with us, but the chat room really is like the highlight of everything. It's live. So WJ, what is the annual? So the return on the chat room. What's the percentage return, Matt, that you've had on your?
It's about, so far, again, I'm just talking about where my trades have been, and I post everything. Earlier this week I made a mistake. I said 700%. It was about 500%. And the reason for that is I forgot because at the beginning of the year I was saying raise cash in your long-term portfolio, raise cash, stuff like that. And I did take some of that cash and put it into my trading account. So that boosted a little bit halfway through January, and I forgot about that. So, but either way, it's still several 100%. And again, the options are risky. I'm never going to tell you that they're not. There are some of these things are going to lose a good percent. But if you get enough winners, which we've been able to do, you get that return that is very, very, which has worked out incredibly well for us this year. And the thing is, I said earlier, I don't want to walk away from that. Let me finish answering that question. Then I want to talk about something else, which is very much related, because I don't want to walk away. So yeah, those are the type of returns we're making because the volatility has been so high. Now, are we going to continue to do that? There'll be times, I'm sure, who knows, early August. August tends to slow down. We'll be out of earnings season in early August. People on vacation. There might not be many trades, but we've also had many very volatile August in the past. So it doesn't mean we can't, doesn't preclude it. But a lot of people think that, well, geez, the summer months will really slow down. It's like, actually, July is a big month because that's when all the earnings, that's, the second quarter earnings come out starting in July. It goes through the entire month. They're actually into early August. And you see in some of the big moves, the huge moves we've seen during earnings season this past quarter, with what's going on in the world today, there's a very good chance that we're going to continue to see that. So there is going to be plenty of volatility there. It may be more in individual names than the broad stock market, but it's going to be there. So yeah, I hope that answers your question on what we've been able to do. Again, I would say I don't have a 3-year track record to give you because that's not what we just started. I can't make up a record that didn't exist.
Yeah, and ultimately, I think that if you have a 7-day money back guarantee, literally, like, you can go and try it literally risk free. So I'll tell you, man, I just wish you would have joined last week because these past 2 weeks, I just gotta watch myself what I say, but like, yeah, it's been insanely good. Yeah, it's been like really good in the chat room. So
it's worked out really well. And again, not every week is like that, but we've had a lot of, as I think I've shown you all these trades. This has been a regular thing. I can't say it's every single week, but we've had a lot of really good weeks and this year, and the returns have shown it. The one thing I wanted I started to go off on, but I didn't want to get off on a tangent, so I just want to come back to one other issue. To really talk about, it's really important, is that we have these tools. I mean, I use what the hell are you talking about? Well, what I'm talking about is weekly options. All the major stocks have weekly options, and almost all of them are very, very liquid. In other words, if you want to make a bet, tomorrow that Apple computer is going to just take off in one day, well, you can buy calls that expire the next day, or you can buy them that expire a week in one day. In other words, next Friday. In the old days, you had to go out. You would have to go to till the end of June. Okay, and if you go that much far out in time, they're much more expensive because obviously the person who's letting you make that bet has a higher risk. It's giving you more time for that big move to take place. He's got to charge you more because he's taking on more risk. He or she are taking on that more risk. Now you have weekly options. Many of the mid cap names, medium sized names, they have weekly options, and of course the index options all have expirations 3 times a week. Now, next week, it's Monday, Wednesday, Friday. Next week, because we have the long weekend, will be Tuesday, Wednesday, Friday, because Monday, of course, the market's closed for Memorial Day. But so just, and also we have all these ETFs. We have inverse ETFs. We have leveraged ETFs. And so we have all these things that we didn't have in 2008 when the market was when volatility went up through the roof, and didn't have it in 2000 when the market was going through. And we really didn't even have it in 2018. We did, but just not to the same degree with the same liquidity. And even though some of these things have lost, they're not as active as they used to be, they're still wildly liquid. I mean, just because it's like saying a football team went undefeated one year, and the next year they only won 15 games. They're still, it's the same thing. It's plenty of liquidity.
Yeah, I want to give a quick shout out here to R Lago. Welcome to the family, brother. Let's go.
Thanks for joining, and we're going to hit the ground running tomorrow, especially when we hear with what's going on with NVIDIA. NVIDIA, the stock is still down. It's interesting though, the S&P is down less than 0.5% on the QQQ futures and the NASDAQ futures. So I thought they'd be down more than that. So we'll see what happens tomorrow. And I'll tell you why. Okay, let's have a little talking about this educational thing. One of the reasons why I was talking about that this market could indeed do better. Okay, let me just go here and let me go here. Sorry, I just want to blow it up so you can see it better. It just takes a second for it to load there. I apologize. And what's going on? Okay, I told you about that. Okay, well, let's look at this. Look, this week I do need to show this chart was from the beginning of the week. So it's a couple of days old, but it's a weekly chart, so it hasn't changed much. And you can see that the S&P 500, again, remember I talked about this RSI, Relative Strength Index chart? It's got down, it's only been more, if you go back to the financial crisis, it's only been more oversold once, okay? And that was at the pandemic low. And that, of course, was when everything just shut down. We're not in anything like that right now. more oversold. So it's, more oversold than it was in 2018, 15, or 2011, and only been exceeded by that. Okay. So that's telling me, geez, this thing's getting it. Well, there's no guarantee it could get more oversold. It certainly did in 2020. Maybe it goes all the way down to its 200-week moving average. That's that purple line. I don't know. But the thing is, so that's one piece. Okay, there's another one. Now we look at the NDX, again, the NASDAQ 100. It's just as oversold, actually slightly more oversold than it was in 2020 at any other time it has been since the financial crisis. Again, can it go down to its 200-week moving average like it did in 2020 or got very close? Well, it could. But again, now we have two pieces of evidence. Now we look at something called the Bollinger Bands. And again, we talk about these things in our Wednesday calls. The Bollinger Bands, it tells you when a stock or an index or an ETF, or an asset class. Sometimes we'll do this for gold or oil, whatever. It's got more than 2 standard deviations. This is it's a weekly chart, the 20-week, not the 200-week, the 20-week moving average. Okay, it got more than 2 standard deviations below that 20-week moving average, 2 weeks in a row. Look what happened when that same thing happened back in 2020. It was followed by a sharp rally. 2018 followed by a sharp rally. Now this one actually had 3 weeks. So, and this week, believe me, it was below it. This chart was made over the weekend, this past weekend, 3 days ago. But you can see that this thing, again, there's another reason to think that maybe this thing's getting up for a short-term bounce. Remember, I talked about earlier, I'm very, very concerned about the market. I think we're going to see a lot more volatility. I think we're going to see lower lows. But these are kind of the reasons why we've made a couple of bets on the bullish side of the market this week and made some money. This is the exact same thing for the NDX. Okay, the Bollinger Bands, same thing. Oversold, very similar below that greenish line that tells you that it's more than 2 standard deviations below its 20-week moving average. Then, okay, this is one that worked out really, really well and why we were able to make our money today. Look at the high yield index. Very, very oversold. The high yield market is very highly correlated to the stock market. And that was one of the reasons why we made that call today.
Quick question, Matt.
Yeah, go ahead.
Well, I mean, whenever you're done with that, just because I think
I'll just say this one thing. I just talk about this. What happened today in the high? Now, remember, I showed you that thing on the high yield market. It had gotten very, very oversold, right? Well, look at it bounce back. Look what happened today. The reason why people were like, "Oh my gosh, the market looks like it's going to roll over and get hit hard," and I'm like, look at the high yield market. The high yield market is even though it's a bond market, it trades much more like the stock market than the corporate bond market does because they are very economically sensitive. If you buy a corporate bond, an Apple computer, we could go into a recession. Apple's not going to default on that bond. You don't have to worry about that. So those bonds trade with the treasury yields. Okay, high yield bonds. If the economy gets really bad, there's a chance they default. A good chance, depending on the company, the good chance that they default on that bond. So it trades with the stock market. The stock market trades with the economy. The bond market trades with the treasury yield, which is based on the economy. But there is a difference. And I knew that this rally in the bond we saw it was doing better, and then it shot up today. I was like, that is positive news. And I said it on the chat room. I was like, this is a reason to go long. And again, people bought the calls on the SPY, the QQQ, the TQQQs, and made double their money or more before the end of the day, before the market rolled over a little bit. So again, we're looking at all these different things, trying to educate people, not just to tell them what to do, but why to do it. So they can continue to do it in the future.
What do you think about Minard calling 8,000 for Bitcoin? You think it's just, what do you think about that?
I mean, listen, Scott Minard is a very, 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 very successful investor. He's known as a fixed income bond market guy. He's kind of been all over the place. So, and it's just hard to follow. He said when Bitcoin was trading at 60,000 last fall, he said it was going to 100,000. Then it rolled over and it was trading at 40,000. He said, it was trading at 40,000. He said it was going to 20,000 just before it bounced to 46 or 47,000. Now he's turned bearish again, and he's saying he's looking for 8,000. He's all over the place. I don't know. He's not. I don't disagree with him. I agree that these these cryptocurrencies have more downside to do because of all the liquidity in the marketplace that's being sucked out of the marketplace after, you know, a massive injection for 2 years. But 8,000, I don't know much. I mean, again, here was a guy who was saying everybody should be buying the stock market literally a month ago. And now he's saying the market's going to go down big. So I don't know. He's kind of all over the place. And so I wouldn't be, I am worried,
Right.
but we got to keep things in perspective. And he's kind of got off the rails.
Okay. And what are you seeing in gold right now? It's near a 2-week
gold-
high. Yeah.
The gold, this is, let's pull this right up. Now I'm going to put up gold, which is the commodity. And then we can look at the GLD, which is the ETF. The ETF for gold. And then we have, because there's an ETF for gold, the commodity, and then there's also an ETF for the gold miners stocks. But see this thing, let's move it back. Let's look at a longer term. The one thing that people are saying is like, you know, why isn't gold doing better? And believe me, I'm asking the same question, but it should be doing a lot better if it's going to be, you know, if it's a true inflation hedge. And we all know now that the Bitcoin and these other cryptocurrencies are not a good hedge against inflation, like some of the bulls had thought. But see how gold here, it came down, it became oversold, fell below its 200-day moving average. The thing about gold, oddly enough, is that in 2000 and 2008, everybody's saying there was a huge flight to safety in gold and everybody went running into it. That's true, but not initially. Initially, it sold off with other things because part of it had to do with gold was a source of cash. Remember I talked about how it was how Apple was a source of cash for people who were selling their cryptocurrencies a week or two ago, 2 weeks ago. Well, that's what happens with gold sometimes. Now I'm going to show you something here. This is gold back during the big rout, okay, of the great financial crisis. I'm sorry. Let me zoom it in a little bit better for you. But see, initially, the great financial crisis, I mean, the stock market started going down and gold went down with it for the first several months. Then it rallied in a flight to quality trade. Then, when the worst was really going through the worst, it went back down again. Why? Because people could sell it. They had margin calls in their fixed income and stock portfolios, so they sold gold to meet those margin calls. Then when that came about, it rallied again in a flight to safety trade. And the same thing happened in 2000. So that's what we're seeing now. I think it's going to see a very big rally. We just have to wait to see on a technical basis when it's going to really break out. So we've had here a lower high and a lower low. What's this going to do next? It looks like it's trying to do better. It's come off that oversold condition. Let's get rid of some of those lines. Those are moving averages here, and you don't really need to see those for this situation. But you can see that 1800 level, it dipped below it a little bit there, dipped below it this time, but it held again. So let's see if this thing can break out a little bit. I also look at what we look at all the time called MACD charts, and these are momentum builders. See how this thing is worked out, you know, it's seen this nice rally here over the last 2 weeks. Let's go commodity. What happened? I froze up. Okay. Yes. Commodity. And these MACD charts are momentum. So you can see the momentum has turned bullish, right? Well, this is, and let me explain. How does that show it? The white line is the 9-day moving average. The red line is the 12-day. See when we see significant positive crosses to the upside, look at that big rally there. Nice positive cross there, nice rally there. Okay, we had a head fake in here, didn't really happen, so it didn't really take place. But same thing over here. Each one of these ones was followed of these positive crosses. Now the negative crosses, obviously we're bearish there. They don't happen exact tops. They happen after tops to tell you that sell-off is not a head fake. Or when it's starting to go back up, that the rally is not a head fake. The momentum is starting to build up. This is a nice bullish sign. What we need, I want to see a little bit more follow through. On a short-term basis, I'm going to get rid of those moving averages again. Okay, get rid of those moving averages so they don't clutter up things. So what we're going to be seeing, the last 2 days, okay, the high in crude oil has been $1,866. What I say, so basically 1869 2 days ago, 1866 today, but it's within a couple of points, with a couple of dollars, which was something that's almost $2,000. So $2 is not a big deal. If we can break above that, that will be a good sign, because it will have followed a positive MACD cross, and that will be a sign that this thing's probably got a nice further run. So that's what we'll be looking at gold, and that's what we'll go look at the GLD, gold ETF, and look at the calls on that. But again, gold, it's so many things. That's one of the greatest things that we talk about in our educational aspect of this business, of this website, of this chat room, I should say. It's not a website, it's a chat room, is that we talk about so many things that seem, so many rules on Wall Street are, first of all, convoluted, and there are others that are generally accepted rules that are just wrong. And one of those is that gold is always a great flight to safety trade and always a great inflation hedge. It is, but it's not as the correlation is not as strong as people think. So we have to be careful with that. And so that's why I do like gold, but this is what I'll be looking for tomorrow and Friday, and as we move into next week. If it can break above that, basically 1870. And whenever we break a supported resistance level, we always want it to be more than a very slight break. We frequently get what you call, head fakes, or it gets slightly above it, and everybody comes rushing in. Small money comes rushing in, and the big money comes in and slams it down. And same thing. So you want the same thing to the downside. It breaks the support level just slightly, and then the big guys come in and buy it right back up. So you want to make sure it breaks out in a more meaningful fashion, and breaks down in a more meaningful fashion before you make a negative bet.
Yeah.
Those are the types of things that we talk. Again, we're talking about that stuff all
Every
the
day.
time. Yeah.
And can you take a look at PayPal? I mean, it's I'm looking at the stock. I don't know if it's too. I mean, it could go lower, right? But I don't want to be that person that's like, oh, it already went, it already dropped so much, you can't drop anymore.
Well, before
But
we do that, I'll answer that question. The stock's already fallen so much, it can't fall any further. Well, that's what they said at Netflix right here, right? And look what it did. So it can. But let's go to PayPal, that you asked about. However, at some point, this is going to be a stock that's going to bounce in a big way, and we're going to be able to make some money on the long side. I have not pulled the trigger. All the way down, I keep saying this is going to be a great buy at some point, and yet I've been saying it for 3 months, and it hasn't turned into me. Luckily, I've said it's going to be a great buy at some point. I'm not pulling the trigger yet. I've not pulled the trigger. I'm still waiting to do it.
That's the thing. Like even though we're trading and we're doing all this stuff throughout the day, people can ask you, and they do, about like, hey Matt, what would be a good stock maybe that I could hold for 5-10 years? Maybe I want to save for taking my kids to college or a vacation, whatever it is. Put some money aside for 5-10 years, and so it becomes an investment swing chat room more than just options, right?
Well, I guarantee you, these stocks, oops, CBS. Here's Chevron. Here's a stock that I absolutely I've loved for a long time. I still love it. This is a stock where I was telling people you ought to buy the calls back in the end of last year. You ought to buy the calls. You ought to buy the stock. It's a great stock, great yield. I'm bullish on oil, which I've been bullish long before anybody else was. I turned bullish in October of 2020. Believe me, back in 2020, I was bullish on Chevron. But as we came into here towards the end of last year, I was like, hey, it's starting to break out again. Let's buy some calls. But it was also one I've been saying, okay, take some profits on the calls. That's great. But let's hold on to the stock. Hold on to the stock, And I still look at it, still wants to go higher. And the same thing with a lot of different energy stocks where I've said Devon Energy and Conoco and Occidental Petroleum, where they started out as short-term trades, but they were also then turned into swing trades and turned into long-term holdings and remain that way.
Right.
So we're updating them on all sorts of levels: options, swing trades, and a long-term basis. Whether it's kind of played out its thing. And
yeah, I mean So I mean, just so you guys know, just be the fact that you're talking to a chief market strategist in the chat room, like I'm telling you, you're already way ahead of anybody at that point. But Matt, so let me ask you a question, man. So oil, this thing, it keeps ripping, and let's say the Ukraine-Russia thing is just going to stay there. It's just not going to go away. So does that mean that oil is just going to permanently rip forever? Or
well, that's the thing. It doesn't have to rip forever. If it stays above $90, these stocks should be able to hold up very well. And there's people in the people who are, I mean, I'm a macro strategist, and but you listen to the people, some really smart people in the energy business, and they're saying, oil's going to be between 110 and 150 just this summer. And this whole thing is that the war with Ukraine is a war of attrition. Now they may change it. They may change it to be less sanctions and more in terms of tariffs. That may be something that can give us a little bit of relief. But we just can't pump the oil. I mean, no matter what they say, they can't pump any more oil. And they talk about demand. It drives me nuts when I keep hearing these people say, well, the Fed is going to knock down demand so much that the economy is going to slow down. It's like, no, haven't you been listening to what they're saying? They're saying there's only so much we can do. This is a supply-driven inflation environment. Those are the kinds that hurt. Demand-driven inflation is not bad. First of all, demand-driven inflation is gradual, and people can afford it because it's demand-driven. Why is it demand-driven? Because people have better jobs and getting paid more money, so they're willing to pay higher prices. And a supply-driven one, like we had in the 1970s, which took place with the OPEC oil embargo, okay, people weren't making more money, but oil prices were still going up. It was not demand-driven, it was supply, because they had an oil embargo. They stopped shipping all millions of barrels a year that they stopped shipping, or they cut it way back. Prices went through the roof. Nobody could play it. Stagflation. That's what it is. Stagflation. That's what we're going through right now. People can say, well, we're not there yet, or we're not going to go into recession, maybe not until next, at least not this year. That's what Wall Street does. That's what I try to cut through it. Most of Wall Street is paid to be bullish. They're not going to tell you that we're in a recession until we're already in one. Okay. And the fact that Goldman Sachs is saying there's a 35% chance of a recession means they really think there's an 85% chance, because nobody, if it's not good for your bonus or your job security, if you're an economist calling for a recession, they just don't do it on Wall Street. They don't do it until after we're already in it. And so that's what we try to cut through here. And that's why, again, this thing with what's going on, it's a war of attrition now. It's going to be there for a while. And when you have a war of attrition that drags out, that means not only are we going to have higher oil prices, we're going to have higher food prices. We know Ukraine is the breadbasket of Europe. And you say, well, we'll get the oil from somewhere else to give to Europe. That's fine, but we're not making any more oil in the world. So the global prices will still stay high. They're just going to take it from Asia. They open these LNG, liquefied natural gas mobile rigs. That's great, but they're still going to have to take it from Asia. Overall prices are going to stay high. And that's again, these people who keep trying to say, don't worry, the Fed is going to weaken the economy so much. He's told you he loves what Chairman Volcker did. Volcker kept raising rates even though the economy was moving into recession, went through 2 recessions. He didn't care. He said, I've got to make the world go through pain now so they don't go through worse pain later. That's what the Fed is doing right now. We can blame them all we want, and they do deserve a certain amount of blame because they caused the inflation by keeping the liquidity spigots on too long last year. But some of it is not their fault. They didn't foresee China locking down to the degree they have again. They didn't foresee this war, and especially a war of attrition in Russia, and they couldn't have. Okay, but even if you want to blame them, this is what they're doing. They tell us they're going to do it. They're going to continue to do it. And all these economists on Wall Street who keep trying to tell you that they're going to stop don't know what they're talking about. I'm sorry.
I mean, do you think 50 points is enough, man? I mean, inflation is insanely high. And look, they say inflation is 8%. We all know that's a bunch of,
right. And that's on the CPI, on the PPI, the producer price index. It's at 11%. And it's going to come down. There's little question it's going to come down, but it's going to come down. So it comes down to 5 or 6%. These people, it's still going to have a 6 handle on it at the end of the year. 6% inflation, which is 3 times anything has been in the last 25 years, and really, and the highest has been in 40 years since the 1970s. That people say, oh, as long as it gets better, people are going to feel good. No, they're not. Okay, they might feel better that they're now that the rental car, the used cars are getting cheaper. They'll feel a little bit better than that, and they'll feel a little bit better than new cars are cheaper, or that finally at some point housing prices will come down a little bit. But you know something? If they're still paying through 64% of the people live paycheck to paycheck, and if the oil prices are still high and the food prices are still high, they're going to have less to buy elsewhere, and it doesn't matter. It doesn't matter if inflation comes down; it has to come way down.
Right. And you and I have been talking about these sessions. I don't know if you remember when I was first starting, like talking, like asking you, like if you were concerned about the consumer. And at first, hey man, it's just Netflix, right? But now it's becoming more of a conversation, and now you're seeing it on the news. And now, is it the consumer strong or not? And even though they say wages are higher, real wages are lower.
Right.
So,
That's the important thing. You hit it on the head, Rodrigo. It's not wages are higher. I mean, people, there are good jobs out there. People want a job, you can get a job. The problem is real wages. When they talk about real wages, it means your wages versus inflation. So yeah, geez, I'm making 5% more money than I did last year, but inflation is up 10. Is it 10 or 11%? I can't make more money. And that producer price number that I talked about, that's what the companies are paying. So their costs are moving up. They're not going to make as much profits. But going back to the consumer that you asked about, it's like their real wages are going down. The essentials, food and energy and housing. I'm sorry. Yeah, I'm sorry. Yeah, food, energy, the things that keep their houses warm or air conditioned. You can't live in Texas if you don't have air conditioning.
right.
You got to have it on. And these prices are going up. That gives them less money to spend on other things. And so the consumer is pulling on their horns. It's something I've been saying all year long. Most people are saying, no, the consumer is strong. And I'm like, what?
Right.
Well, anyway, but again, these guys are paid to be bullish. And now they're finally, with what happened with this week and the last 2 weeks with the people, the earnings reports out of all these retailers, they realize the consumer is pulling on their horns. And our economy is based 70% consumer driven. So again, I'm not calling for a Great Depression. There's some people out there calling for the end of the world. I'm not calling for that. I'm just saying that we have problems. They're being exacerbated by the supply chain issues, by the war in Europe. I'm sorry, in Eastern Europe, and they're going to continue for a while. And so instead of being afraid and crawling up into a hole, we have the tools to take advantage of it. Let's take advantage of it. That's what we've been doing in the chat room this year, and I think we're going to be able to continue to do it. No guarantees on anything, and I would never claim that, but it's worked really well for us this year, and I think it's going to. Again, if we'd only been doing it once or twice, but we're doing it on a consistent basis, pretty much almost every week, and it's worked really well.
So let me move on here to the next thing, right? So talking about the consumer, right? Staying on this, credit card usage through the roof,
Sure.
Auto defaults, ripping higher, worrisome higher. So, and savings are not really that, it's not like we have high savings like they say. So where do you, could we be in a similar or worse position in next year, or do you really, is hard to say?
Well, I think we'll be in worse shape 6 months from now. Whether when will the bottom come? I don't know exactly. No, and I'm a trader, and believe me, I'll be but I just remember back in May of 2009, and some people were saying it was a sucker's rally, and I said, no, this rally's got, this is the great financial crisis. I didn't know if it was 100% behind us, but I knew the rally would last. And I was right. So again, it's going to be hard to call the way in the future, but things are going to get worse in terms of the marketplace. And that whole thing, it's so true. People are saying the savings rate is the high. I said, no, the saving rate's not high. They I didn't say they're lying, but the saving rate did jump through the roof during the pandemic because people were scared to death. It is back down to pre-pandemic levels, actually below pre-pandemic levels. But what they make the mistake of saying is they're saying that household net worth is up. No question, okay? But that's because people's homes are higher and their stock prices are higher. Well, actually, their stock prices aren't higher anymore. They're come down quite a bit. And homes, it's great. That's great that somebody's home is up a lot. But if you own stocks and you suddenly need to make, I'm not making as much money, so gosh, I've got to, I'm going to have to dip into my savings to pay for my. I had a certain amount put away for my child's college, but boy, they're going to be a junior next year, and I don't have quite enough because I've lost some money in my portfolio. Well, great, I'll just sell some stocks in another portfolio, and I can pay it off, no problem. Great, that's fine. But those stocks have suddenly come down quite a bit, and you can't turn around and say, well, I'm going to sell my driveway. Your house is your house. You can't sell your driveway, a little piece of your house, so you can pay off your college bill. So This is not liquid assets. What people have that are liquid that they can pay their food and energy for is back to pre-pandemic levels. And it's actually starting to get worse because people they can't pay for it. They got to go into the credit card to be able to pay for it. And it's,
And
yeah,
that,
go ahead.
yeah, that's the last. So I mean, and that's going to be maybe the last I mean, look, if we do go into a deeper, heavier, worse situation, I mean, it's just concerning to me to see that the banks might be under pressure as people, don't have money. They have to use their credit cards. Their rates on their mortgages are going up. The auto declines is just a clear indicator. So like, could this eventually spill into maybe a real estate sort of market
It certainly
collapse? Or
could. I mean, the one thing I'm not as worried about, the banks as I was back in 2007 and 2008, because they are better capitalized. It doesn't mean that they're in great shape. But the whole point is that literally they needed to be completely bailed out back then. That's not a situation we're facing, at least not now, unless things get really, really bad, which is always possible. But that doesn't. The thing is, that it cracks me up because just because it won't get that bad doesn't mean it won't get bad enough to cause problems. And it's just like one of the big one at the end of last year when I kept saying, excuse me, with the change with the Fed's policy, this is going to be really hard on the stock market, and for all those different reasons. That first of all, the market had been pushed up way ahead of the fundamentals, so I knew it had to come back down. But people were saying, yeah, but this, you say it's a bubble, but it's nowhere near as big a bubble as 1999 or 2000. I'm like, no, I agree. Why does it have to get to that kind of a bubble for it to burst at some point? The chances we get another bubble that big in our lifetime is zero, almost zero. I mean, they'll happen again because everybody will forget about it long after we're gone, and they'll have another big bubble. They had it in 29, they had it in 2000. We won't have that kind of bubble, but just because we didn't get to 30 times earnings doesn't mean the market can't top out. And it's the same thing here. Just because the banking system probably isn't going to fall to the brink of a complete implosion doesn't mean that the stock market won't feel the pain of what they'll be going through, or that housing prices will come down. We've had a lot of housing busts along the way that didn't cause the serious problems we did 10 years ago, but they still caused direly serious problems. But I remember in the early 1990s, everybody used to talk about the look-through buildings. You'd walk down, you'd look out your building and see another building. You could see right through it because there was nobody in it, no furniture, no anything. And yet we survived. It wasn't. We could have that kind of same type of thing without it being the worst. And so yeah, these are the things that tend to happen when you go from a situation where there was massive amounts of liquidity that allowed all sorts of investors, both institutional and individual. They came in, they added massive amounts of leverage to their portfolios. That took the markets too high. As they deleverage, it usually takes it to the other extreme. It usually takes them they don't stop at fairly valued, they stop at undervalued. And that's, I think, the process we're going through. It won't be as big. It won't be an 80% move like we saw back in 22 years ago, but it is going to be a big one. I think bigger than we've seen so far.
yeah, it just seems crazy to me, man. When I turn on the news and I hear people saying that the consumer is strong, is like, people are paying 3 times to fill up their gas. They're paying. I mean, it just doesn't make any sense to me. It's people that I think are out of touch with reality, maybe. But I think that is
It's like saying, something, Tom Brady still looks good, so therefore 5 years from now he's still going to be winning Super Bowls. You can't. You have to. I mean, now you can say Tom, because I'm a huge Tom Brady fan because I'm up here in Boston. But hey, a lot of people are saying he could have another. They could win the Super Bowl next year. But what some of these analysts, it's like you are taught. Your job is to analyze stuff. What do you see out there? Well, I see they're buying a lot of stuff now, so that must be good. It's like, you're not looking at the inflation. What are these people looking at? I just don't know. I don't know how so much of what some people definitely. I'm not the only one who called this, but we're in a big minority. But to just sit there and say, I've got lots of people getting on planes to go on vacation. I'm like, well, of course you have. There's pent up demand. It was the second winter in a row. They were like, I'll pay whatever. I got to get away. Then they came back from vacation. They're like, okay, well, we're not doing anything this summer. We're going to do a couple of day trips to the beach, but we're not going to Nantucket for a week. And because of all these things have gone up. Again, a lot of people have done well. in the last decade, and they got some nice money, made some nice money, made money in their investments. But a lot of people, more than half the people in this country live paycheck to paycheck. Okay, and the costs of them have gone up, and when they come back down a little bit, that's not going to be enough to help them. It's not going to be enough for them to say, "Hey, guess what? We're going to Cape Cod for a long weekend." They're just going to say, "Well, I'll drive you to the Horseneck Beach for the day." And that's it. I don't want to sound too alarming, but it's just been frustrating for me to watch intelligent people from all these firms go on these financial news networks and say things that's like they haven't done any analysis here. And again, I'm one of those people. I'm on all the time. I was on Bloomberg yesterday. I was on Bloomberg in England earlier this week. CNBC twice last week. I'm sorry, but you just.
Well, I mean, you've been right all along. Your call has been right throughout. You haven't changed your call. You are one of the few guys in Wall Street that has made the call. You've been right, and you're on it. You haven't been flipping back and forth like everybody else does today.
Right.
When
the market was rallying in March for 2 weeks and it rallied 10%, and people are just like saying, how could you still be bearish? It's over. I'm like, this is a sucker's rally, raise cash, get more defensive. And it worked out extremely well. And I've been doing this a long time, 40 years. It'll be 40 years in November. And I've just seen it before. I've seen these cycles, and a lot of other people haven't. And I guess maybe that's why it's so obvious to me, because I've seen it before. And for other people, they haven't. And it's funny because they were all making fun of these old timers, right? Who were really bearish in the fourth quarter of last year. I'm talking about money managers, people who actually run money, okay? Like Carl Icahn and Jeremy Grantham, and these people who were like saying the market's going to have a very tough year next year. Not just, we might have an 8% correction. We're going to have a tough year next year. Well, these guys have been around longer than I have, and they've seen all these things, and they're also billionaires. It's like, so, but they were all laughing at him. They're like going, he's an old guy. Warren Buffett's got his biggest cash he's ever had. Well, what an idiot. Well, now he's looking real smart, right? I mean, calling Warren Buffett's, people are saying he's past his prime. It's like, he wasn't past his prime at 92, but he is at 94. Come on, these guys are smart guys, and it's just but the thing is, it's normal, it's healthy, it's okay. We're gonna make it through this stuff. But why just weather the storm? Let's profit from the storm. We've been doing it this year in the chat room.
Exactly.
Let's continue to do that, because when the bottom does come, you're going to be the one who has the confidence to step to the plate and really back up the truck and buy stocks like you were backing up the truck to buy Apple, Microsoft, and Amazon in 2003, right at the lows. And while everybody else is saying, "Oh my God, if you just get a small bounce so I can finally sell it," even though it's already down 50%. So that's the goal here.
Anyone can join. Look, and here's how I'm going to put it to you. Okay. I don't care what you do. I don't care what your profession is, right? I don't care if you're a plumber, you work anywhere. It doesn't matter. But this can be something that can help you get some extra help and income, right? Obviously, we do have people that are traders that get into trade, but when there are normal people that have normal jobs that they have to find ways to bring in additional income for their family or for themselves, you can either go try to work all day, or you can also try to work smarter and get into this chat room and learn about this and trade with us, because we're banking on this chat room. And I'm telling you, like, even though things can be tough out there, you can be making money trading with us on either way, up or down, right, Matt?
Exactly. And well, the one thing though too is that in the next week or two, if this market rallies, whatever happens, right now we've kind of stabilized, rallied a little bit. We're going to get another leg lower, I think, starting sometime in June. Well, June's only a week away, so that's I was going to say June or maybe even a little sooner. But and my big point is that it's going to it's coming, and because we're going to start all that stuff I talked about earlier, where people are going to have to start lowering earnings estimates. When that starts coming, and I think it's going to come just before we get to the earnings season. The next earnings season starts in July, so in June, all these analysts are going to start changing their numbers. And that's going to cause another downlink. And that's when I'm going to say, if you're not in the stock thing trading every single, all day long, We have people who work and who are working, they're checking it here and there, checking it quite a few times a day. But there are people only a couple of times a day. We're going to have some trades, probably in the VIX calls in particular, but also some little bit longer dated calls. And the VIX comes back down and the options get cheaper. We're going to make some calls. I'm sorry, I'm going to make some plays. I don't want to say calls because it's an option. I'm going to make some plays, some bearish bets that will go out a couple of weeks, and we'll be talking about them in Matt's important comments, so that so you don't, if you're not there all day long. But we are heading, I think at some point we're going to get a couple more legs lower. I think one is coming soon. I think we'll get another one in the fall, and these are going to be ones where you'll be able to profit on the way down. You don't have to trade it. I've seen it shown a bunch of trades where we bought one here and then sold them the next day. But I also sold some of those VIX trades where we made a very nice return and it was over 3 weeks. And so we definitely gonna be doing that, especially in the next couple of weeks. And don't forget too, August, I think a week from Friday, Amazon finally splits, and we'll be able to trade those options a lot cheaper and a lot more aggressively than we have in the past.
Yeah, I mean, it's great that, you're able to do all that stuff in the chat room. And the trade I made today, man, it literally took me like 30 minutes, 20 minutes. Like, you don't have to be like, there are a lot of people in the chat room that they're there all day because look, they make a lot of money doing it. Of course, you're going to watch that thing all day. But, if you have a part-time job or something like that, like, I mean, I'm busy as hell here. Trust me. Like, I can't be trading the whole day in and out. So if it's 20, 30 minutes, get in, get out, 20, 30, 50%, whatever, that is more than enough. Let's not be too spoiled, guys. Like, that's a very, when you're trading these things, you can, you don't have to be there the whole day to make money there. Right, Matt?
Exactly.
Yeah. So I saw Broadcom was trying to do something with VMware. So it seems like cybersecurity might be the hot M&A topic coming forward. What do you think of that?
Well,
Cyber?
it just has to be. I mean, it's just too important to the global economy right now. And we have all these tensions all over the global geopolitical tensions all over the world, China and Russia, hacking all our stuff. This cybersecurity is vitally important. So it's a group that we're watching and look at those stocks. And these are the ones that are a little bit longer term. I say longer term, but they're not the quick trades, not where we're going to make the options over just a couple of days or a week or two. These are where we'll be looking at ones where maybe some longer dated options in the calls, or same thing with just to buying the common stock for nice long-term or intermediate term holdings. And the other thing too is it's not just there. I mean, right now I'm telling people, Amazon. When is Amazon going to bomb? I just don't know. If the market heads lower, like I think it will, this stock has already been underperforming for 2 years now. First, it underperformed by going sideways, then it went down. But this is a great company, and people should be putting a small amount of money into Amazon every month for the rest of the year. Same thing in Facebook, same thing in Google. I don't know where their exact bottoms are going to be. So I'm not saying, pour a lot of money into it. Later in the year, that's when we'll get a time where say, hey, back up the truck for long-term purchases. Right now, put a little, believe me, your average price at the end of the year is going to look very, very good. We don't like to do that in any of our trading. Even if we have just a swing trade for a couple of, we want to do it for a month or maybe just 2 weeks or a month or 2 months. You don't do that. When you lose 10% on a swing trade, on a trade, short-term trade, whether it be a day trade, especially if you're just buying the common, stock goes down 10%, you get out. We're not worried about that. We're talking about the big long-term bucket, and we're not talking the active trading. We're talking about the long-term bucket. Add a little bit of money every year, $100, $50, $500, whatever you can afford, a little bit every single month. And then at some point in the fall, probably in the fall, I'm going to say, okay, those long-term portfolios, now we want to get more aggressive. Let's get into these stocks a little bit more. But these stocks have great long-term prospects. There are companies that are never going to survive, or if they do survive, they're going to have a tough time for several years. Facebook, Google, and Amazon are not those stocks, so they're going to do well. So again, that's another thing there. But another thing I just want to point out. So we're there's a lot of different things. Right now, we are doing a lot more trading because the market's incredibly volatile, but it's going to create these unbelievable opportunities, and I think we're going to have an opportunity to really see the market get hit soon. And we'll take advantage of that. then we'll take the ride up, and then I think there'll be another sell-off, et cetera. And then when you really get the market washed out, and it'll happen when somebody big goes down, a big hedge fund gets liquidated or something like that, then we're going to come in and really back up the truck and buy the market. But that I think is several months away. And but along the way, we'll be making trades on the long-term portfolios as well, because Facebook, Facebook loves that this is happening to them this year right now. And Zuckerberg, I'm sorry, Zuckerberg is so smart. He's like, hey, this is happening to us anyway. Let's not fight it. Let's just let it go. It's an election year. We came into this year with a big target on our backs, and all these regulators want to come after us. Now we're sucking wind, and let's let them think we're sucking wind, because we'll just spend the money and build ourselves back up. He is one smart cookie, and in the longer term, so then when the election goes by, then he can come back and do what he's doing, and he'll always have regulatory issues. Don't get me wrong, but he was really smart. Again, he didn't cause it to happen, but once he saw it happening, instead of fighting it, he just said, 2022 is going to be a lost year for us. Let's throw let's get all our dirty laundry, get it all out there, let the stock go down. And most of the people there have owned the stock when it was a gazillion% lower anyway. They don't care that it's come down, because they're going to ride it back up. And so, that's kind of what we're looking at. So we're looking at short-term things, intermediate-term things, long-term things. Right now, we have spent more time on those shorter-term things, but again, I'm a strategist. I'm not just a trader.
Right. Let me ask you something. It might sound weird, but like I saw something on Bloomberg. They were talking about like aliens, like people trading that sort. Is there any talk? I mean, how could you trade UFOs like that sort of? Is there a way to trade it, or no? No.
I'm not.
No. Yeah. Okay. Yeah. It was crazy. I was just seeing. I'm like, man, these guys. What else are they gonna come up with? Like.
Yeah. I mean, it's not that. And that's the thing. We don't. I don't do meme stocks. I don't spread rumors. We don't just make guesses. We make educated decisions based on fundamentals, technicals, sentiment, et cetera. And it's just, sometimes it's a gut trade. And we made that good trade we made last Friday when David made, made 10,000. I'm sorry, made what was it, 10,000%?
A 10x, so 1,000%.
Yeah, 10 times. Yeah, 1,000%. I'm sorry. That made 1,000% in half an hour. I just used, well, it was my gut and some other things that I just learned over the years. And
it's unheard of. That sort of stuff. So like you walk into a bar anywhere, you tell someone I made 30 whatever amount in like 30 minutes. It's like, what are you selling, drugs? So I mean, just the fact that you guys are here in this session with me and Matt talking about this, and the fact that you can actually join his chat room and trade, it's pretty crazy. Like this is actually something that's helped a lot of people make some good money.
Right. Exactly. So that's what I'm here to try and do. So again, I don't make, if I'm losing money in a trade, I'm sorry, if you're losing money in a trade that I've given you, I've lost some money too. Some people will ask me, what do you think of this? And I'll say, hey, I think it's good, or I think it's bad. But even if I think it's good, I say, it's good, but I'm not going to go in. But you go ahead if you want, because I can't have 20 trades on at once. But if I said I've made this trade, I have made this trade. And if you make it with me and we lose money, we will lose it together.
That's what I like.
I don't lose money. So
I like that you don't have too many open trades at once. I would not be able to have 10 contracts at once and looking at, because these things move pretty fast, right? So I think it's better that you're focused on it.
Yeah, and my old days I used to follow, and again, these were because I was working with customers trades. Sometimes I have 25 or more trades in a day, and some of these trades were huge. But
yeah, and really quick here, just
and they're professionals. I'm professional. I just don't think, could I follow that many trades? I could, but I don't think I'm helping people by trying to, because not only that is that when you're trading, you have a couple of different eyes. You have the trader at the customer, the block trader, the sales trader. You have three different people all watching the same thing. When it's just you, if it's just you and you forget about one because you're so involved in another thing, and then it's like, oh my God, I forgot about that trade. You don't have that backup, and so I like to keep it small, and it's just a better way to play it for me, and believe me, there are guys in this, men and women in the chat room who have more obviously more trades than I have on, and I'm just giving you idea. I'm just telling you what I'm doing. Okay, if you want to do it, great. If you don't, that's fine too. I'm not your stockbroker, but But I will give you, if you ask what I think about a trade or two, I will be more than happy to give you my opinion on it. But again, I'm just trying to throw stuff out and say, not just throw stuff out there, give people ideas that are thought out and work real well. But
Yeah, and look, the Ram Gomez, I signed Ram a little while ago. He said, this is a comment from him on the YouTube chat. It says, thanks to Matt, I've made trades that cover my entire week's pay in one day. And that's exactly what I was trying to tell you. I know that there's more than one person that is in this situation where you have a job and you're trading and you're making a lot more trading, and you still have your job, and that's fine. But look, you got to, like Matt said, it's weathering the storm, right? Real wages are down. Real wages are down. That's a fact. So you have to get ahead. How can you do that? By making more money. How can you do that? Join the chat room and trade with us. Pat.
Yeah, there's no guarantees in life, but we've had a lot of success, and I have a lot of.
Well, I mean, you're up 500%. You're up 500% on your portfolio. That's
good. So it's worked out real well. So again, next, I mean, I don't say down month, whatever. I like to think that we won't have that, but I mean, is everything going to be perfect? No, we're going to have losing trades. We are going to have losing trades. Every great trader has had horrendous trades that have really hurt them. We stay away from those, from really jumping in with both feet and saying, hey, let's bet 100% of my portfolio, or even 50% of my portfolio on one trade. I just would never do that, especially in options. But we kind of chip away and look at a big opportunity and jump on it. That's what we're trying to do. And chip away. Oh, that didn't work. Let's get out of it.
Right.
Chip away this one. Oh, it's starting to work. Let's go ahead. Let's run it. Let's add to it. And
that's what I like.
Run.
Yes, that's important to note. So Matt's not going to be like, yo, I'm all in on this trade. It's I'm adding it. I'm okay. We're good to go. He's literally giving you the paces so that you can get your entries together. Pat is asking, would you consider yourself a day trader? I mean, if your calls are up 200%, 300% a day, I mean, you won't sell. But what do you say, Matt?
Well, I mean, you're a trader. I'm not. I mean, I again, as a strategist, I focus on what's going on the macro level and what the market's going to do over time. But we do, again, especially recently, we have talked a lot about shorter term trades. And I say day trades. Some people close everything at the end of the day. I frequently leave things open for many days because I think they're going to continue to work. So we do some day trading here. There's no question. And there's some people in the chat room, and that's all they do. But my trading is not. It is not focused on that. When I see a great opportunity, though, that's one of the things, is that I have a trade. Frequently, I'll have a trade that I think is going to work for a week or two, and I think geez, this thing we could double our money on this, and then all of a sudden something happens, and we double our money in a day, and I'm like, because it's in options, it's like time to get out. Don't look a gift horse in the mouth. Get out of the stock, get out of the trade, pat yourself on the back, and move on. So it's funny how some of these trades that I think will last for several days, or even a couple of weeks, end up being a day or two. And very rarely do I do a trade where I buy it and sell it in the same day. I guess that's the best way to answer it. Most of my trades are at least multi-day. And when we talk about common stocks, then they move to be more swing trades that are multi-week.
Yeah, and look, I mean, like, for example, I mean, you could be there like today. I just went in there, I bought it and I sold it, and I didn't stay there the whole day. I wanted it to be quick. So you can do that. You have different ways to do this. So you don't, if you day trade, fine. If you want to do this other stuff with Matt, where multi-day holds, yes, you can do that too. But hey, I'll tell you, volatility is not on a schedule. It's not like I'm coming in, I'm coming out, I'll see you later, I'm coming at 5. Volatility has its own schedule, and you have to go by it. That's the name of the game, right? You want max profits? There you go.
Yeah, it's just, again, there's no guarantees in life, and I just there's these opportunities here, and they've been, and we've had a really hot couple of weeks, so that's worked out. And I just don't. I'm not trying to tell people you're going to be a millionaire by the 4th of July, but this is going to be a tough time, and you can't go from massive amounts of liquidity stimulus from the Federal Reserve and take it away. They're not going from accommodative to neutral. They're going accommodative to tightening. That's what they did in 2000, and the market got crushed. And a lot of people took them a long time to claw their way out. Don't be the ones that say, well, geez, I did okay because the whole market was down 50%. I only lost 15. Believe me, that is a reason to feel good about yourself, right? But because it's those people not only, but it's like, wouldn't you rather be like, I didn't lose anything and I have some cash to spend, or actually made some money? And so now when these stocks are all beaten down, I can actually put it to use. When all these other people are throwing in the towel and panicking and getting out because they wish they had gotten out a while ago, instead I've got the confidence to stay in because I've made money over the last 2 years, not lost it. Now I'm getting in to buy the market. I don't want to, I am not, again, I don't make any money if you trade a lot. I'm making more, any less. It's just, if you join us, that's great. And you can listen or not listen. Nobody, I can't imagine there's anybody in the chat room that does every trade I do, buys it exactly when I do, and sells it when it. Some of them say, hey, I've got my profit, I'm out. A lot of people sell before I do. It's like, this is a great profit, I'm taking my profit and moving on. But it's just, it's something that I enjoy doing. I enjoy teaching, and I enjoy the markets. I hope you can tell that I'm very, I love, very, very, I'm passionate about the markets, and the stuff is right there. We do the trades, and again, go in, and if you join, you go to the free trade, ask people in the chat room, say, so I hear you guys have made money. They'll tell you it's not, it's not, we're not making this stuff up.
Right.
Trades you see are the trades, and the trades I've shown you. And it's funny because I can say sometimes I click on a thing and I say, well, we made 416% on this one. Well, I mean, the way I try to draw the line, maybe it was 412. So maybe I exaggerated. 450, I'm telling you about what we made. I mean, but very close. I'm not saying, oh, we made 416%. It was really only 100%. It just, you can see with the, I mean, I'm not saying, we made, you saw the one where I said we made 3,000%, but you can see right on the screen, it was actually 2,982% or whatever it was. But we're not making this stuff up, and it's worked well. Again, we do have losers. You will lose some money on some trades. The whole idea is to come out ahead, and we have the tools we've had before. That's
what are some sectors? What are some things that you are looking at? Obviously, follow up in the chat room with the trade details and things like that. But just overall, any particular sector stocks that maybe worry you, or maybe you're positive about?
Well, right now I'm really trying to figure out what's going to happen with the chip stocks here. Those are very, very important. I love the energy names. I'm going to show you here. I love the energy names for the reasons we talked about before. But this is the XLE, which is the energy stock ETF. And let's see here. Bang, bang, bang. Let's see how, well, that was wrong. I was thinking about a different stock. I'm sorry. It was Occidental Petroleum. Yeah, it was Oxy. Yeah, see Occidental Petroleum. If the stock market, see this yellow line, that is the 50-day moving average. Let me get rid of the other ones here so you can see it a little bit better. Now, this is, but you see how this year it got right to its 50-day moving average and bounced. Got close to it and bounced. Actually got slightly below it a couple of times, but bounced. Same thing there. If the whole market gets hit really hard, all the stocks are going to go down because people will sell what they can. This 50-day moving average is where I want to be buying Occidental Petroleum. Okay, that's just one name, but I mean the energy stocks I still like for the things I've talked about. Archer Daniels Midland is a stock that I picked for one of the other products we have in the long-term stock picks report. Other products we have in terms of in the Benzinga thing, but see Archer Daniels. That's Advanced Micro Devices. That's not one I've liked. That's one I said you guys should avoid. The stock's gone down. That's Archer Daniels Midland. It's the same letters. I just had them in the wrong order there. Sorry about that. Archer Daniels Midland, big food company. And see, when the stock came down, got down to its 100-day moving average. That was a great place to buy it. See, that's the green line. Let me get rid of some of these lines. But you see, this is okay, long-term players. This is going to be a great one here. I'm going to get rid of the purple line. And I do have to wrap things up here pretty soon here, but see the green line? That's the 100-day moving average. It got to it there late last year, there, got right to it there, and held it. This is good technical analysis. Now, however, can it break back above the 50-day? It couldn't do it there. It's trying to do it now. For the reasons I talked about in terms of hard assets for inflation, food, whatever, if this breaks above its 50-day moving average, which is basically $90, if this can break above $90 by more than just a few pennies, this is a stock that you can make money in the options and the call options, and to continue to like it on a long-term basis. Now, I suggested buying the stock way back in late 2020, and the stock's way up since then, but it's still a good stock. I still like it as a play. But it's like, wait a minute, you're trying to tell me I can make money buying the options of a food company? You can. I'm telling you, you can. You don't need to buy penny stocks to that you have no idea if they're going to ever turn into anything or not. That these guys in the Wolf of Wall Street made money on. We're talking about real companies. Archer Daniels has been around forever, but when they break key levels, the momentum money comes into it. It can run. And it's a good long-term investment. So, and like I said, that's another one where you break. And these are one of these stocks where this one started as a long-term buy, but we get those ones where it start off as like, hey, I bought the options, I made real good money, but you know something, I'm going to take the profits from that thing and put it into the common stock because I think it's going a lot higher. Anyway, that's really what I have to say here. Rodrigo, if you're there, I do have to start wrapping things up, it's we got 2 days left this week. We're going into the month of June. I'm telling you, that's going to be a big month. And it's funny because I've said a bunch of times, hey, next week's going to be a really big week. And my wife, when I do these from home, today I'm in my office, but I've done these from home on the weekend. And my wife's like, you say that every time. And I'm like, yeah, but every time I've been right. Every week has been an unbelievable week. I'm not just saying that because I'm trying to get you fired up. I'm saying it because it's true. That's the way the markets are right now. Believe me, there could be a very good chance at some point in the middle of August, I'm going to say, you know something, next week's going to be a boring week. We're not going to be doing much. And because I don't force things. If there's nothing to be done, if we do there may be a week we do 1 or 2 trades a whole week. That might happen. But I think in the next 2 years, it's not going to happen very often. And but I don't force it. If it's not there, people say, "Oh, I want to," I want it to go higher too. But the signals aren't telling us that. Or I think this stock's going to get clobbered too, but I don't think it's going to happen yet. So let's not get ahead of ourselves. We're not here to churn just to churn. We're here to see it when the market gives us the idea, gives us the opportunity. Let's take advantage of it. But that's really what I had to say here. I'm sorry, this one's a little bit shorter than usual, but I do have something I have to get to by 7 o'clock. So I'm kind of wrap it up there. But I hope you'll stay here with Rodrigo and he can go through some of the things with the chat room and kind of show you the real chat room. But I'm just talking about what I've been saying all this whole webinar here is that this is an unbelievable time in the marketplace. A lot of people are going to lose a lot of money and have lost a lot of money. We've done real well here, and no guarantees of life. I'm not trying to, and there's definitely a lot of risk involved in trading in the options market. Don't have to be in the options market. You can be in the ETFs and levered ETFs and still kind of. But the thing is, the market going down, you can still make negative bets that you couldn't make in the past. And so we can more than just weather the storm, we can actually profit from it. So again, I think the testimonies from the people who are in the chat speak for themselves, and we'll, I'll just kind of leave it there. But good luck. And the 2 things I do want to say that have nothing to do with the marketplace. Number one, I can't even begin to tell you how sad I was last night and this morning to hear about what happened to those young students in Texas. God bless them and their families, and my thoughts. You use the term thoughts and prayers all the time, but it sometimes kind of seems empty. But those people, my heart goes out to all of you, and if they're all those people, and I hope you'll keep them in your thoughts and prayers as well. And the last thing to mention is this weekend is Memorial Day. We have a lot of problems in this country, and but I wouldn't want to live anywhere else. And there's a lot of men and women who've given their lives so that we can have the country we have. It is as tough as it is. It's I wouldn't want to live anywhere else. And I guess my point is I still fly a flag every Memorial Day to honor those people. If you have a flag, I hope you consider it. But if you know somebody who's a veteran, thank them if you get a chance. It could be your father or next door neighbor, whether, it be of any war, I mean, I don't, one person said to me, he said he was a cook on a submarine. Well, I found out he was much more than a cook on a submarine, but that's what he claimed he was. And I said, I don't give a damn what you did. You served our country in uniform, and I can't tell you how I respect it. And just take a second to remember those who have, given the last, as Abraham Lincoln called it, the last full measure of devotion. But again, back to the markets. We live in we have this stuff is normal. It's healthy. It's painful, but we can do more than just ride it out. We can help each other profit from it, and don't fear it. If we avoid fearing it, take advantage of it, we can work out real well. And thank you, anybody who's listening tonight who is a veteran. Thank you so much for all your service, and to those of your buddies and who gave their lives to our country. And I'll just leave it there. And good luck to everything. And those who join the chat, we'll talk to you tomorrow. And Rodrigo, we'll talk to you real soon. And good luck with everything. And thanks so much for taking the time to join us here today.
Yeah, absolutely, man. Thanks a lot, Matt. I'll see you in the chat room tomorrow. Let's go.
Sounds great, buddy. We'll see you then.
All right, man. Definitely. I'll see you there. Folks, again, I'm just going to be here for a quick minute or two. If you really appreciate Matt, what he did and everything, at least like the video or something, just give him thank you. For those that are members and trade with us already, you're good. You know that, we'll see you guys tomorrow. So any questions about the chat, post them now. Any questions about, anything that we talked about, obviously about the trading stuff, like the chat room itself. So what you're seeing here, this is the chat room. I have it open in a window here, very easy to use. You see there's two channels. One of the channels is called Inner Circle chat, and that's where everybody is. So all the members are there. All the members are talking, pretty much sharing research, talking about what they're doing, including Matt. He's also commenting there. The other thing is in Matt's important messages. That's where Matt is posting entries, exits, all that sort of stuff that you need, obviously, to make the trades work, right? Your entries, your exits, if he's adding, if he's trimming, if he's putting a little bit more, taking a little bit off, that sort of stuff, right? And as you can see, it is as simple as it can get. I'm going to sell my SQQQ May 27, $62 calls here. I mean, he's telling you exactly what he's doing when he's doing it. You also get these sort of like educational market updates where he's talking about many times this year. We have said the next few days, okay, we're facing another one of these key junctures once again. This morning, we've seen a nice setup for a further rally over the past 2 trading days, but we got some bad news last night that could throw a big wrench in the works. The setup we're talking about was the strong late day bounce last Friday. That was followed by a strong rally yesterday. I mean, I'm not going to read this whole thing, but like he's pretty much giving you a full market description, all that sort of stuff. Dr. Sheila Patel, you're welcome. You're welcome. That's what we're glad to come here and help out you guys. That's fine. So this is the entries, exits. You do have sound alerts. So as you can see, you can click all there. So if you see, you click all, there's nothing. It's not, it's like that slash. If you click all, that means that you will get your alerts there, right? That means that you will get, sorry, it's my cats. But yeah, you'll get all the alerts, the sound alerts. I turned it off because it's just too much popping right now and I have to focus here. But typically during the day, I have these alerts on, both of them. And I'm in the chat room. I literally post my trade in the morning. I went in and I posted it there, like, so, and people do that every day, every single day. Cypher, what up, dude? Louis in the house. What's up? Miss Lou, right? Miss Lou. We got Oz. What's up, Dr. Oz? Is that Dr. Oz? Matt's awesome. Definitely, man. Hey, bro, how much for a course to teach me how to touch? Yes. All right, guys. I mean, yeah, if the market crashes, I'm telling you, I'm ready. I already know what I got to buy and what I'm shorting. I'm ready. Got dry powder. So it's good to go. Like, that's what I like with Matt, where you're making money towards, if it comes, right? That moment. Once that moment comes, you definitely want to at least know how to profit from it, right? That's all I'm going to say. Obviously, it sucks, right? The economy is not good. It sucks, but it doesn't have to suck for you. Like, you can actually make money in this chat room. Like, I don't know what's stopping you. You have a 7-day money back guarantee. What else? What else? I mean, unless you don't want to make money. If you don't want to make money, then, go watch something else. But if you do want to make money, join this chat room. 7 days, literally money back guarantee. If that's not a good enough deal for you, where someone can actually give you this risk-free for 7 days, and that's still not good enough, then maybe you're not good at making deals. All right, that's all I'm gonna say, right? Because if anybody gave me this, right, 7 days to try it out, risk-free, and I make money with it, like it just, like common sense, guys. DR Pogal. No, this doesn't come with that. No. So if anybody here has Pro, just know this doesn't come with Pro. It is a totally separate thing, separate site. However, if you do want to work out something, you can call me and maybe I'll work out something with you. Just give me a call or email me. Email is better. So yeah, DR Pogal. You can do that. No worries, man. That's totally fine. If you guys have questions, I think it's good to you guys, let's do it now, right? Instead of waiting for emails and stuff like that. Because a lot of you guys already emailed me, but we can knock it out down if you got time right now. Does the 7-day money back guarantee start after you receive the computer? No, Pat. So we would send you we would send you the laptop after the 7-day money back guarantee, right? So if you decide that you like money and you want to make more of it, we send you the laptop after the 7 days. If money's not your thing, then no worries. It's not for everybody, right? I really think that this is something that, you guys really should consider. If times are tough, then why not join? Why not make extra money? Because there's only so many hours in a day that you can work. There's only so many hours, you know what I mean? Like you got to sleep and all that stuff. So the only thing you can do is make more money. You can't make more time in a day. So think about that. Take that home. I want you to think about this. The deal will expire at midnight, but I do want you to think about one thing, and that is how can you improve your financial situation, right? How you can start making more money if that's what you're looking for, right? If you are watching this because you want to make more money, you want to learn how to trade, and be profitable, be successful like Matt. If you want to do that with our community, it's not impossible. All you have to do is join and click the link there and join our team. That's it, And then if you don't like it, you get all your money back, you move on, and that's it. Like, it's really not a big deal. It's not a big deal. If it makes you money, then you're welcome, right? Well, I mean, Matt, right? Give the thanks to Matt. So that's all I got to say here, guys. I just wanted you guys to more or less get an understanding of the chat room, how it works. Everybody that joins today will get $400 in something in stuff here that I'm going to give you guys. However, like internally stuff, just make sure that you email me, email rodrigo@benzinga.com after you sign up and just be like, hey man, I signed up. And I already know. So just email me that for those that are joining. Donald, send me an email. So everybody, if you have questions, like personal questions, like about your specific situation of buying this and stuff, and feel free to email me, right? That's probably going to be the best thing. Carlos. Yeah. All right, Carlos, I'll hook you up. Yeah, Donald, look, if you guys have something personal to talk about, I understand why you're not posting it here. I get it. I didn't take that into account, but yes, email me. That's why my contact's there. But keep in mind, I am in this session right now, so I obviously can't do everything at once. But I check my emails and I always answer them. So, okay. So in the YouTube chat, I put the contact there. Again, if you're serious about making money, you can call me, you can email me. Again, if you're serious, because that's what we're talking about, like, trading and all this stuff here with Matt. And I'm telling you, I already know it because I'm in it. Like, I'm in it, I'm trading, and I know the people in the chat room here that are doing it. So if you're serious about it, if you really want to make a difference, if you really want to start trading with a group, with a community, and doing what we're doing, following Matt's strategy, if you're serious about making money, if you're serious about trading, call me, but only if you're serious, right? Please. We have so much stuff going on here with the members that we have, like the current members, and it's so fun. We're trading the entire day. So I really think that you should give it a shot and be a part of it. I promise you're not going to find anything like it. There's no two Benzingas, right? And there's no two Matts. So Miss Lou says, Matt's a really good guy. Unlike other platforms that give you alerts, with Matt, he tells you exactly what he's trading and when. completely honest and clear. And that's the thing. I mean, transparency is a big thing. It's a big thing. I mean, the fact that he's up 500% on his trading portfolio it's almost so high that you even like almost don't want to say it, because it sounds, but I mean, when you're up that much, look at what he's trading. We're buying calls on leverage stuff or puts on leverage stuff. That's the kind of moves you get on that. So, and then the reason why I'm saying that is because you can learn as you go, right? You can trade and you can make money with Matt, but at the same time, you're learning about what's going on, what's happening in the markets. Again, if you're serious about this, if you're serious about making money and trading, I'm here and I can help you, right? I can help you like getting into this community, giving you this opportunity, right? I'm giving you this opportunity to join with Matt. So Cobbs, this webinar is not recorded. I mean, the Inner Circle members can watch it anytime. They have access to that and a lot more stuff. They're like the spoiled child. So but it's but everybody can watch while we're live here, whatever. We're not going to be here for too much longer, honestly. I'm just going through the questions, doing that sort of stuff. But Donald, if it's a personal stuff, like a personal question, you can email me, and that's fine. I'll get back to you. It's like 6-7 p.m. here. So we still got a couple, hours to put in for the day. Let's see. So Carlos, about the stuff with you mentioned, right? Give me a call. It doesn't matter if you have pro or you don't have it, guys. I can still get you the deal. I'll work something out for you. Again, if you're serious about trading only. DR Gopal, I just emailed you. Got it, brother. I'll check my email here in a bit. Mosquito balls. Mosquito balls. You're shorting Tesla. I mean, I don't think it's a bad idea. I mean, I think shorting is an amazing idea right now in this market. It's just you need to be strategic about it so you don't get your face ripped off on the bounces. That's it. Okay. Yeah, I mean, Donald, you can send me the email, brother. No worries, man. Send me the email. We'll get in touch. I really look, guys, I'm talking from experience. I've made like a lot of money in the past 2 weeks in this chat room. So I could show you my account. I showed you yesterday the trade I made for like $30,000, like something like that. Look, I mean, you can make some serious money in this chat room. Okay. I don't know how else to put it. If that's what you're trying to do, if you're trying to make money, then join, right? If you're just, just seeing how the weather is, that's different. But like in the chat room, we're all serious about making money. We're serious about that. People are paying, 1782 a year, but they're making $5, $20, $30,000. And not everybody, obviously, everybody's results are different. But I can tell you my personal experience, I've made over 50 in the chat room just in the past 2 weeks. So if it's something that you want to try, give it a shot. You have a 7-day money back guarantee. We should even take that away, honestly. But like, hey, we'll leave it there for today. So if you do want it, we'll give you a 7-day money back guarantee so that you can make up your mind if you like money or not, if you want to trade in the chat room or not. That's up to you. I'm just here to give you the opportunity and put this in your plate, in your vicinity, so that you're aware that there are things you can do to better your situation. If you feel you're struggling right now and you can't pick up another job, you can't pick up more hours, right? Even if you could, whatever it is, use this as something that can help you bring additional income. That's what I do. I mean, this just brings me more money. So why would I stop? Right? It's just one of those things, It's one of those things where it's like, if you're lucky, everybody that's here watching this video right now, I'm telling you that you're already ahead of the person next to you because you're already sitting here at the table with Matt. You're already doing these trades. And I know people in this chat room that have like, over $500,000, like even $1 million accounts. So there's people from all aspects in this chat room. There's people that are new traders that are just starting. There are some really advanced traders there as well. And again, I can't talk about this chat room without talking about the community. I'm talking about the members. David, we got Tammy in the house. What's up? Tammy pulled out some good trades today, right, Tammy? I think I saw that in the morning. Was it SPY? I don't know if you were trading the SPY or the Qs. But I basically was taking the same trade you were taking. I went long in the morning on the TQQQ on some calls for like maybe 20 minutes, and then I got out and I made like 12%. I mean, it's fine. It's still like, I'm okay with that. I'm fine with that. But okay, Pat says coupon code is not showing up on the payment page. Huh? What do you mean? Like the checkout's not working? Okay, it seems to be working. I just logged in, so it is working. I would just refresh the page, Pat. Um, let's see. Miss Lou, all right? Miss Lou. Miss Lou signed up here with me like 2 days ago or something like that, right, Lou? She's on the YouTube chat. I mean, I want you to go read it yourself, obviously, but if you don't, and you're not reading it, I'll tell you what it says. I've made 2,000 euros in 3 weeks trading a small 5,000 euro account. Lou is a member of the Stock Picks Inner Circle chat room. What's your excuse? Why are you not there? You have a 7-day money back guarantee. I would like to know what what it is, because I can even try to help you out as much as I can. But if you are able to join this chat room and you're hesitating, I'm just telling you, you're literally just wasting time not not joining, because that whole week where you're thinking about it, we've already made money on the chat room. So you want to sit there and wait, sit there and wait. If you want to come here and join and trade with us, come do it. We welcome you. We want you to be part of the team. All right. Lou says in 3 weeks. So 3 weeks, you've made 2,000 euros. It's like $2,000 right now. I mean, I know the euro went down big time, so that's like $2,000 around there. And that's the thing. Like, I mean, you could be, let's think about it. You could be in Europe, right? And your currency gets massively devaluated. It's like, what are you going to do about it, right? Like, I mean, you have to find ways to get ahead. And sometimes you have to, I mean, trading is really, this is why I love trading, because it gives everybody the opportunity to make money, right? Everybody from anywhere in the world, doesn't matter what you are, look like, you can come into the markets and you can make a killer winning. You can do that, right? And that's the beauty about it, that everybody can do it. The common man and woman can come here and make money for themselves, right? I mean, it's a different job if you want to call it a job, but hey, it's kind of fun. You pop into a chat room in the morning, you're talking with traders, you're talking about trades, you're making money as you're doing it. Dude, I could be cleaning windows all day. If you pay me enough, I'll do it. So same thing. I could be in a chat room all day. If I'm making enough money on it, I'll be there. And that's really what I'm trying to explain here. Like, I would be there all day, but of course I have to do other stuff here. I got to work, and keep in mind, I'm literally working on stuff to improve the chat room so that we can all have a better experience together. So Lou, okay. Oh, so Tammy's in the house. Louis B is in the chat. So Louis B is the handle. Okay. I've gained from your and Tiff's advice. Thanks. Tiffany, is that the same Tiffany that made the target like 4,000 something % trade on the puts? I need to meet this Tiffany. This Tiffany I keep hearing about. Okay, guys, we've had enough fun here. All right, but let's get serious. Let's get down to business. All right. If you want to become a better trader, if you do want to trade with the community, go ahead and try this. I'm being like 100% real with you. Give this a shot. There's a 7-day money back guarantee. So at this point, if you can literally get it and you can test it and try it out, and it's gonna make you money, why not? Like, I mean, I really would like to get, some sort of like reason of why, it's okay. I get it. If you don't want to make money, I get it. It's not for everybody. Maybe you're trying to learn how to trade. Maybe you're like, oh, I'm too new. Look, man, you literally get the exact entry and exit from Matt. He's telling you what he's buying, when he's buying it, what's the contract price. That's it. All you have to do is go on your phone, go in there, buy the contract, and that's it. Okay. Louis, I'm late starting, but I look forward to getting started. Yeah, man, look, it's a great chat room. It's a great environment. I know there's a lot of people there. If anybody has issues with the checkout, let me know. Pat, I don't know if you were able to fix that. Let me check. I don't know if you use PayPal either, but let me take a quick look here. Yeah, so it seems to be working. Oh, okay. I'm working on filling it out. Yeah, no worries. I'm gonna wait for you. So let's do this, man. I'm just gonna wait for all you guys to like sign up, and just if you want to talk here, we can do it. I'll wait for you, Pat. I'm not gonna leave you hanging, brother. I'm gonna give you a proper welcome to the community. It's the least I could do. It's the least I could do. So let's go over a couple of trades here. Let me just see what Matt's up to. So yeah, so those that are asking, yes, you do get a free laptop. You will get the laptop. Good question. And the schedule of the chat room is Monday to Friday, 9 to 5 p.m. So that means that you can literally sit your, you know what, like just there the whole day. You can sit the whole day, just trade with Matt the whole day. So I wish I would have been able to trade for the rest of the day because they made some good money in the chat room. But I just, again, 100% honest, I just went in there for 20, 30 minutes, made a trade, got out and got back to work. It's pretty busy here. I'll tell you that. You guys keep us busy here. That's good. Um, and and yeah, I really just think you should give it a shot. You know, there's a great community there. You got Tammy, you got Lou, you got David. There's so many great people. You got Paul Wallace. Paul Wallace, I remember him. Like, I think a month. He joined like a month ago. Um, literally made like $4,000 on his first day. He was still. So you'll see that. You'll see that like people join and like during their 7-day money back guarantee period, they make like a ton of money. Um, so it's obvious, right? You're gonna keep it. And that's why we have a 7-day money back guarantee. Like, would if it wouldn't, you know, if it wouldn't work, if it would be like some crappy stuff, then you would know, and then you would just get all your money back, right? I mean, or you wouldn't even have a money back guarantee. The fact that you have the money back guarantee shows you really that we're very open and confident about this working. I'm very confident about Matt. I mean, how could I not be confident? I've been here for about a year and a half, and I'm telling you that Matt is on point. He's literally called the past 4 corrections within a week time error margin, and he's called this crash we're having from the beginning. I remember it gives me goosebumps sometimes, but like this guy really knows what he's talking about. He's really in tuned in the markets. Like, you know, he was telling me all this time, like whenever we do these sessions, like if you guys pay attention, like we talk about some important stuff here on these sessions. We're here to talk about the chat room. I get it. But like we talk about so much other stuff here. Like we pack the entire day of news into like an hour, 2 hours, and we talk about it from a trading perspective. And that's really what we're trying to do here. We're trying to think like traders, have an open mind. Um, so so yeah, I mean, that's give it a shot. Again, if you have questions, you can call me, email me. But you know, pay attention in these sessions when Matt comes here and talks because he's a very smart individual, and I'm telling you that you can learn a lot from him too. I've learned a lot from Matt, and I think I really owe a lot of the. I mean, I owe him a lot, you know, because I made a lot of money from his picks. So you know, um, it's just a very interesting dynamic, right? Once you join this chat room, I'll promise you that. So all right, guys. So it was very nice hanging out with you here, Pat. Let me know if you still need help. All right, let me know. All right, and I think at this point, you know, it's safe to say, you know, we've been here for like 3 hours, something like that. So we've answered every question. I don't think anybody has any more questions here. I know my email's like about to blow up here, so I want to thank everybody for being here, for participating, for taking a step towards financial education, right? Trading, being able to become a better trader takes time. It's not a 1-day thing, right? It's not a I'll do it on Monday. You know, it's like you have to be, you know, you have to like focus on your craft if you want this to be your craft. If you don't, then don't, right? But if you're serious about trading, if you're serious about making money, if this is really what you want, if you know this is what you want, then go all in, right? Don't like half-ass it. Like go hard, you know, learn, be in the chat room all day, and you're gonna learn. And that's the most important thing. Like, you know, this money, like, you know, paper it's just paper. It's paper. What matters is what's in your head, what you keep there, right? Money comes and goes, but like what you keep there is what's gonna stay with you forever. And that's what's gonna be able to make you more of that paper that you want. So um thanks for being here, guys. My name's Rodrigo. I very had a good time here today, guys. I very much enjoyed it. I want to thank all the members here for being here. Tammy, Lou, David. I know there's a bunch of you guys here that I wouldn't be able to name all you guys, but go ahead and just feel free to reach out if you got questions. We're going to be waiting for you guys in the chat room, all the new members. We're looking forward to seeing you there. If you have questions, call me, email me. And again, stay safe. I hope you guys have a wonderful day, wonderful weekend. Make sure you're staying safe. You're always, you know, and thoughts and prayers for the situation and the victims of the, you know, what happened in Austin. So very unfortunate, guys, but you know, we're here to help if anybody has any questions, right? So have a great day, stay safe, guys, and we'll see you guys in the chat room.
tell you, oh, baby, it's time. You are my bread and love, baby. You are my light in the dark. It's time to tell you, you are my bread and love, baby. You are my light in the dark. not behind the scenes, on the streets. The shadows broken, swept away, swept away, swept away. Run with your life, not behind the scenes, on the streets, the shadows broken. Downstairs, the enemy